All right. Good morning, everybody. We're going to start here just momentarily. Make sure that you're tuned in, turned on. Feel free to chat in where you might be joining us from today. We will start here momentarily. Just making sure everybody is okay. You see the screen okay? It should say Ultima Trades in there. And again here, start momentarily. All right, fantastic. Just turning a quick camera on over here. Make sure you guys, again, are tuned in, turned on. You do hear me all right. You see me all right. And we'll be off and running here momentarily. All right, excellent. Just making sure everybody, a couple of people chatting in right now. If there's an echo on the sound, you might have multiple browsers possibly open. That's all I can think. Just making sure you're good to go. And again, you can see me kind of looking around here a little bit. I've got a lot of different screens actually positioned around me, so just making sure that we got everything in place. So fantastic. All right, a few informal items before we officially do get started here. As I was saying a moment ago, I'm always curious where everyone's joining us from. So feel free to chat in, just, what city and so forth. I've traveled a lot. I'm broadcasting today from St. Croix, the U.S. Virgin Islands, where we've lived now the better part of about 18 months. Kind of go here and I head back to Arizona, which used to be home base. This is now a home base now, but head back to Arizona a few months out of every year. That's about it these days. But all right, we're off and started here. And again, Nova Scotia, it's still cold. Ooh, that does not sound lovely this time of the year. It's warming up. Maybe the big freeze is over. All right. So fantastic. Looks like everybody hears me all right, probably sees me all right. By the way, if you see me looking around, as I say, a few informal things. By the way, somebody said originally from Christiansted. That's where we're at. So about 100 yards off the beach, just to the east of Christiansted downtown area. So anyway, wow, nobody's actually from here. That's interesting. With that, as I was saying, a few informal items this morning. The first one is you can ask questions. Also, you see me kind of looking around. I have monitors all over, especially on a day it's been relatively volatile. Today's kind of mellowed out a little bit. To be honest with you, a half hour ago, I was getting a little nervous about even hosting the webcast because one thing you're going to learn about me, I'm pretty much no holds barred when it comes to positions. Show you every position I have on every single step of the way. And I don't have any heavy position risk right now, but these big down days have been really good trading days. So it always concerns me to do like a webinar during the day. And I always want to do these webinars during the day because it's live markets, live market action. Then I always get concerned that I'm like, oh, what happens if we have a really big day? Today, though, again, a little bit of an inside day, but boy, those S&Ps were up 70 this morning, and they've completely reversed. With that, throughout the course of this, you can absolutely ask questions. Everybody always asks that, like, is this live? Yeah, it's live. Take a look at the screen here. It's May 10th. It's just after 12 noon Eastern time. I am actually in the Eastern time zone. Technically, I'm in the Atlantic time zone, but we're in Eastern time right now. With that, so you can ask questions throughout today's presentation. In fact, I suggest you do so. I'll try to hit each and every one of them throughout the course of the presentation. We're going to move at a pretty good clip. And with that, let's get started here. So welcome, everybody. Today, we're going to be discussing a little bit about Ultima Trades. It's a high probability income generator. My name is Don Kaufman, and you are watching a TheoTrade presentation. Now, quick risk disclosure. We are not financial advisors nor a broker-dealer. One of the primary reasons that I actually popped that on the screen, everybody pops this on the screen, but not to confuse, I actually did work in the brokerage side of the business, and before that was even the market making side of the business, but worked in the brokerage side of the business for 15 years. It's where a lot of people are probably familiar with me, but I'd left the brokerage business in roughly 2015, and I'll talk a little bit about my background here just a few moments. Next, this is why you're here. So we're going to talk considerably about Ultima trades and why they're absolutely ideal for the current market environment to potentially generate monthly returns. One of the things that I really want to stress right off the bat is that what we are doing today, right? It's for volatility. It's for this kind of marketplace. And every item that I show you today, these are not hypotheticals. Everything I've actually done are based on live trades that I'm executing. I'm constantly executing trades. And again, we're actually going to execute some live trades throughout the course of today's presentation. We're also going to learn the trading symbol that professionals use pretty consistently, all right, to create Ultima trades. Learn how and where you can find edge as a retail trader, reap the benefits of high probability trades, okay, while learning how not to take large losses. And of course, which products are actually going to be the most effective for this. And again, I'll describe a little bit about what Ultima is and where we're actually headed as we dig into this a bit deeper. I use an indicator constantly throughout pretty much every single trading session. That indicator is actually known as the expected move. If you've ever caught a video that we've done on YouTube, I use the auto expected move just incessantly. We will provide you a copy of this, a link specifically to the auto expected move indicator. Stay with me right until the end of today's presentation. It's a $500 value. It's something that we use so consistently that we feel each and every one of you should have a copy. And again, I don't just allude to it during today's presentation. I'm going to display it here in the next couple of moments. And if you're kind of curious what the auto expected move indicator looks like, here, this is actually a screenshot of the auto expected move. And this screenshot happens to be specific to Apple, but just to make a quick point, right? What these three lines happen to be, and again, I'm just going to draw on the screen for a moment so you can see there's 1, 2, 3 lines. That is what the option marketplace depicts forward risk to be. So when you're looking at these three lines, and again, we've got tons and tons of videos, even on YouTube about this, but if you look at these three lines, you'd see that the marketplace often adheres to that. The option marketplace is designed to handicap forward risk. Like this is today's expected move. I took the screenshot right before I started here, and you can see we actually held the lower edge of the expected move in Apple. We bounced a little bit. We're fading today. Okay, I can give you umpteen different reasons you should use this indicator. The indicator doesn't tell you necessarily whether we're going up or whether we're going down, but we often hit the upper edge of the expected move and pull back. We hit the lower edge of the expected move and we actually rally off of it. There are some great uses for this. And again, I would love to display it to you live. You want to see something insane. And I'm serious about this. I want to see one of the most amazing aspects of this marketplace in the midst of one of the most extreme marketplaces, okay, since the financial crisis. Yesterday, okay, we closed on the lower edge of the expected move. Okay, it hit it to a T. And again, these are just lines on a screen, right? These lines are actually deadly accurate. And by the way, we are effectively going below the lower edge of the expected move, this is dire right now for markets. If we actually lose the lower edge of the expected move, we could absolutely be in a little bit of a tirade of selling. I'm just going to throw that out there right now. Not telling you anything you probably aren't looking at in your screens. Few housekeeping items: shut the door, turn off Skype chat, whatever else is distracting you, close Facebook, put your phones in silent mode, get rid of the kids, definitely get rid of the grandkids. That's the best part about grandkids, right? Hand them back. You took the time to be here. I'm going to move at an incredibly fast pace today. This is important. Focus on being here, because I'm going to tell you right now, everything I'm going to display to you, again, I'm going to take a completely no holds barred approach, which I do every time I do this webcast. We are going to execute some live trades throughout the course of the day. When I say that, I mean, I'm going to show you accounts, statements, everything. Okay, there's, hey, listen, this is our marketplace right now. This is what we look forward to, is this type of volatility. And that is contrary to most people's opinion of this marketplace. But this marketplace has opened up incredible opportunities if you know what you're doing. And I'm actually going to show you what some of those opportunities are today. So here's a bit about me. I always state, like, I watched order flow for 15 years. And in large part, that is actually why I'm here. What that basically means, let's say I watched order flow. I got to see everything you were doing. I worked at both thinkorswim and TD Ameritrade. I was very early on in thinkorswim. I started working for them back in 2001. I was on the executive team of thinkorswim. I was there when we took the company public in 2007. I was there when TD Ameritrade acquired us in 2009. I signed a 5-year lockup deal with TD Ameritrade when they acquired us. After my lockup deal was over, I exited in 2015, and that's ultimately how we launched TheoTrade. The history of me being in the markets, I started in the late 90s, working in Chicago, and just a short time after I started, I was invited to that brokerage firm, thinkorswim. To this day, all right, I still use a little bit of the thinkorswim platform. I also happen to use some Tastyworks. As I said, you'll see every position I do throughout the course of today, because I think it's, most people don't really show live accounts, live markets, and I want you to see all of that. The one and probably the largest takeaway at my time of both thinkorswim and TD Ameritrade, I actually ran the education division, started the education division of thinkorswim, then went on to run the education division of TD Ameritrade. And at the time, we had 7 million clients. So effectively, I got to see what everybody else was doing, meaning that we got to see all of your order flow. And moreover, and like, people don't really get what that means, we got to see everything you did, everything. Okay. We studied every trade that's, you've ever dreamed of out there. If you looked at an iron condor, you ever sold covered calls, people want to know, hey, do retail traders actually make money in the markets? We got to see all of that. Okay. Evidence of what worked and what didn't. And a lot of what you learn here today comes from the specific knowledge of what works, and actually, more importantly, what doesn't work. Okay. For retail traders. I mean, we literally got to see everybody making billions of dollars of mistakes. One last aspect I always bring to your attention on here, you can email us. You can email us literally at any time, just support@theotrade.com. If you ever need to get a hold of me, we use a common inbox. Just put my name, Don Kaufman, in the heading, and that'll get to me. So still do a couple of TV appearances. This is TD Ameritrade TV. I did CoinDesk yesterday. Do CNBC from time to time. So still pretty active, obviously, doing some media hits. Let's get down to business. What are Ultima trades? Today, each and every one of you, if you're joining us here live, you're going to learn a little bit about Ultima trades. Okay. The first and foremost is, and I want to bring this to your attention. I'm going to kind of sit back here a little bit from the screen, but if you're kind of curious what Ultima is, people are like, Ultima, ultimate. It's not actually what it means. Ultima has a lot to do with volatility. So higher volatility has resulted in significantly more options premium. Okay, so we have a lot of people here that are live with us right now. And I'm just kind of curious, just by, you can say yes or no. How many people here have actually embarked and traded upon some options at some point? Okay, just yes or no. Yes, Y for yes, N for no. So how many people have? All right. All right, pretty good number in here. And if you haven't, it's okay. Like, hey, please come forward. We have a lot of people on, and not too many people ever really want to talk when it's live. Again, I do a little back and forth over here. These are not rhetorical questions. Jump in anytime. So some people have traded options, some people haven't. There's some good stories, some not so good stories. Well, first and foremost, implied volatility. Okay, really, since the onset of COVID, has been through the roof. Now, I could sit here all day and I could talk about, people love to talk about like VIX. VIX is kind of, honestly, it's like my predecessor's volatility indicator. Like, I talk about VIX, but not that much. But here's the onset of COVID. And the one reality is we've been in a higher volatility construct pretty much since the onset of COVID. But that's not what Ultima is about. It's not just about like volatility. Option volatility skew changed with the onset of COVID. Okay, and the volatility remains at record highs. When I say volatility, the volatility, is now we start looking at something called VVIX. So it's the volatility index. VVIX. By the way, you guys, whoops, swing and a miss. VVIX. Okay, it's the volatility index. Look at this. Okay, so I'm actually going to bring up the entire history of the VVIX. And if you look at it, you're like, holy smoke, what happened? You know, people talk a lot and they don't have a lot of data to back it up. But one of the things that changed in stark contrast, look at this. I mean, right here is the onset of COVID. We rarely are below 110 on the VVIX, the volatility index. That may not mean very much to you, but effectively what we're saying is we're in this higher volatility construct. And if you kind of want to know what Ultima is, Ultima has everything to do with, if you looked at market volatility, all right? So market volatility, and then you look at, you know, well, what is volatility? And you can actually look at what's termed Vega, okay? And then you have Vama, and you actually have Ultima. And what has actually changed in this marketplace is this massive edge. If you know where to look for it, a massive edge has actually opened up in volatility. As we said, we have kind of a higher volatility construct. And it's not just VIX. Like, I can't stand when people are like, well, VIX is not that high. Actually, the VIX is really high right now. We're approaching the 34, 35 level in VIX, which is still, historically speaking, incredibly high. But that's today, all right? But for the last 2 years, this Ultima has been incredible. And I'm actually going to teach you a little bit about what that means. In addition to Ultima, you've got skew. Skew has been phenomenal. And when people talk about skew, it's like just a distortion. You think of a distortion of pricing. And skew has also been incredibly high. You can look at like record amounts of skew. By the way, the symbol is SKEW. I mean, you can take a look live, take a look here in the screenshot, but all of this, okay, all of this, you're talking about like Ultima and VIX and VVIX and skew. It's all for nothing if you don't understand, okay, what we're really looking for. So let's get down to kind of brass tacks. What are we looking for? Skew. And what is skew? It's a distortion in pricing, okay? Skew provides edge and sale of the out of the money options. So I said options. It's the second time I've said options here, and it's okay. We are going to discuss a little bit about options. Now, bear with me for a second. I know I always look at like the numbers of people that are on the webcast live, right? Because this kills me, because the moment I mention options, people are like, that's it, I'm out of here. You don't want to drop off, because I'm going to tell you, even if you don't trade options, okay, you should pay attention to what I'm going to say, because right now, the options marketplace absolutely, unequivocally, and definitively drives flow to the entire market, meaning that the options are like the cart leading the horse. If the option markets see big size, meaning that people trade a lot of options, it's actually moving the market around. People go, why is that? It has to do with hedging activity. If I buy a ton of options, I could actually drive the market higher or lower, depending upon if I traded a call or traded a put. As some people that are joining us today have zero options experience, just hang out, man. You're going to get it. Okay. Just hold that thought, because I'm going to start with some of the basics, but then I'm going to work into the extreme. I get a lot of people that tune in here and they think, this is going to be too basic for me. Promise it won't. Then we get a lot of people that tune in here that go, I don't even know what he's talking about. I've never traded an option. You're going to be okay too. I actually have designed this for kind of both ends of the spectrum. So hang with me over here. One of the things you got to understand about options is that many retail traders, you're retail, I'm retail, but many retail are buying options. How do I know that? Because you open up a brokerage account at Robinhood, they only allow you to buy options. You open up an account at Charles Schwab, they're only going to allow you to buy options. But I'm going to tell you right now, it's making it incredibly beneficial to be a premium seller. Skew is making it incredibly beneficial to be a premium seller. This is actually yesterday. I wanted to show you an interesting statistic. Now, yesterday was a kind of a rocking day, right? I mean, it was a big down day. Look at this. 45 million option contracts traded yesterday. Last year was also, I mean, last year was rocking. We had some volatility. We were averaging 36 million last year. This year, we're already averaging 41 million, okay? More volatility, bring it on. People are trading through this. Like, you think people are getting ripped apart? No. Mom and pop sitting home doing nothing with 401ks are the ones getting eaten alive in here. And I'm serious. You've got to learn how to defend yourself, but more appropriately, you got to learn how to go on the offense right now. And that's exactly what we're going to discuss. okay? But 45 million option contracts, people, that doesn't lie. Doesn't lie. I'm telling you right now, right? Not only are people trading through this, it's a glorious time if you know what you're doing. What does that mean? It means we're going to learn to sell options. Many of you have probably heard through the grapevine, selling options is a way to make money. Anybody ever heard that one before? Selling options is a way to make money, okay? I mean, again, a lot of people are not ready for it, and they talk about margin and what about margin? Don't worry, okay? We're going to hold your hand through that, but a lot of people hear about selling options. But then you always get one in the crowd, all right? It's a pretty quiet group here right now. But then you always get one in the crowd that go, I sold options and I got run over. Like, I didn't even see the Greyhound bus that hit me. Listen, if you've experimented on options, I threw it right in here. You know full well that there's definitely risk involved, okay? And I have no qualms about that. We're going to talk incessantly about buying options, selling options, okay? But we're actually going to build Ultima trades. And it's a very, very different construct to take advantage of this. Okay, one of the things we want to do is get in, get out, and take very nominal amounts of risk. Today's session is all about design, like the myth from the real risk, fact from fiction in selling options premium. Even if you've sold options premium before, okay, a couple of factors. Number one, sit tight where I actually break everybody through the learning curve. Number two, we are going to cover, okay, some material, no matter how experienced you are. Again, no matter how experienced you are, we're going to cover some material that you probably are not familiar with. We are going to talk about risk mitigation, which is going to be just controlling the risk. And the last portion of that, and you'll hear me say this a lot, just stop with the whole margin thing, because I'm going to tell you right now, margin is no longer an issue. I can show you how to circumnavigate margin. Remember, I spent 15 years in the brokerage world. By the way, I'm not here to day trade, but if I have one more person, okay, come at me about like the day trading margin restriction, there isn't one. If you know what products to trade, I'm going to say that again. If you know what to trade, there is no day trading margin restriction. Okay, you can circumnavigate that. You've been able to circumnavigate it for years. So I can't stand all that stuff. Like, you know, you have these people that are teaching these webinars that they don't have that background knowledge from what products to trade and so forth. And again, I've spent my entire life around the market making side of the business. I grew up around this business. There's no stone will leave unturned. And I implore you, ask questions throughout the course of the day. Okay, there's nothing. People always ask, what am I going to make? What am I going to do here? We'll show you your accounts. It's fine. Okay, all of it. Again, it's no holds barred, approach to this. Now, don't panic. You can do it. As I said, you may know nothing about options. That's okay. Newsflash, premium, okay, and selling premium. You can have accounts now as little as $2,000. The reason I put 5,000 in here, and I want you to know this, because inevitably somebody's going to come in here and say, but I have an IRA. You have an IRA, that's fine. Okay, so do I. In fact, you have to have $5,000 in the IRA to be able to sell premium. That's not my rules, brokerage firm rules. But here, this is a fairly complex position. Okay, there's a fairly complex position. It's producing P&L. I'm tying up $3,500. That's my cap requirement. And by the way, this crap is live. Every P&L you can see it. But when you start looking at the position, right? Ooh, that little monkey right there has to be closed. When you start looking at this particular position, it only ties up $3,500, and that's in an IRA. If you were in a regular taxable account, it would tie up half that. Half! All right. So for those of you that are brand new, for starters, just grasp big concepts. Let's get into this. Many facets of selling premium. There's a lot of different terminology used in this industry for selling premium. You hear talk about like credit spreads. Anybody ever heard credit spreads? And when I say sell premium, you may hear me say selling naked, sell premium, delta neutral, iron condors, okay, mumbo combos, all these like ridiculous terms. Okay, they all basically mean the same thing. You're just selling premium. Even delta neutral can be, derived back to selling premium. You can create bullish trades with selling premium. We can create bearish trades selling premium. But generally speaking, premium selling is actually construed as market neutral. In fact, in today's session, you're not going to hear a lot about MACDs and Fibonacci's and Bollinger Bands. Okay. Because again, we're gonna circumnavigate a lot of that discussion. We're gonna be predominantly market neutral. I think you guys are gonna like it. All right, probability and profitability. Everything you do in this business, everything you do in this business is based on probability. Again, a lot of people, they come in and they email us here at TheoTrade. They email us here at TheoTrade. You know what they actually ask in the email? They say, in your track record, how often are you right? And I go, I don't know, 95% of the time. And you go, what? Everybody can be right 90 to 95% of the time. That doesn't necessarily mean you're going to make money. Don't believe that crap for a second. And I am so adamant about that because it becomes infuriating when you've been in this business a longer period of time. I can create trades all day long that have a 90% probability. The probability doesn't necessarily make you profitable, okay? Markets are always a trade-off. Higher probability can actually equal higher risk. When somebody says, I'm right 90% of the time, what happens when they're wrong? They're wrong big. I mean, listen, you can be right 90% of the time and still make, good trades, but one bad trade could really set you back. So people want to know where they can actually find edge. And that's predominantly what they're here for. Good, because I'm going to show you something incredibly important. Now, this is where I say to you, each and every one of you, this is where you better want to start to pay attention, because we're going to go from, a little discussion over here about probability to boom, let's actually start talking about trading. Let's just jump right into it and start talking about trading. One of the first things I'm going to do here is I am actually, I'm going to kind of draw on our screens a little bit. Make sure I got enough slack on here. We're going to start drawing on the screen a little bit. I want to make sure everybody understands this. So this is a stock, and the stock is trading right at 50. And again, I don't, I've got lots of PowerPoints in here, but I like, not only to do this live, I like to do it dynamic. I like to show you in the markets in real time. And as I said to you, everybody always asks the questions, is this live? Of course. I mean, here we are. Okay, SPOOs are down 19, now 20. Okay, we're 1230. We're into it. By the way, we're about to break lower. The S&Ps. This is oh man, this is getting interesting. Okay. By the way, if anybody's ever curious, before I dive too deeply into this, as I said, I will show you every aspect about profit and loss. Okay, I don't care for better or for worse. People want to see the account statement in here. Look, I have it grayed out. No, I don't. You just open it up. You want to see what I've made year to date. Okay, the account here started with, I usually sweep my account every time it gets to about $250,000. I sweep it and knock it back down to about $250,000. This has been a fairly strong start to the year. I'm up about $134,000. And again, you can see where I've made money, where I haven't. All right, made a lot of money in, well, here's Facebook, here's NVIDIA. You can see every position. Probably some of the biggest positions are some of the options and futures contracts, which I will discuss here. You can see, again, some significant profit and loss in bonds. Bond markets I'm doing phenomenally in. The micro contracts I'm doing phenomenally in. And again, it's totally no holds barred. So that's P&L. This is just one account. By the way, if you want to see what an IRA account looks like, okay, this is a very small IRA. I actually moved most of my IRA over to Tastyworks, very small IRA. Present value is $73,000. It's up $40,000 on a year-to-date basis. Don't ever let anybody tell you that in a down market, it's not going to be degrees of profitability, right? I don't say this stuff. And by the way, there's the break lower in the marketplace. I don't say this stuff for like impress upon you anything other than the fact that you got to understand volatility. This creates more opportunity than we've seen in years, right? You have to know how to go about that. Okay, so let's do it. First example that I've got here today. Again, look at the jump P&L on a day-to-day basis. That's that little push lower. Count just jumped. All right, volatility is really starting to rage in this marketplace. So we're gonna get going here. Let's move into this $50 stock. First thing about this $50 stock. Do I own the stock? Nope. Do I want to own the stock? Nope. Okay, why do I not want to own the stock? So I'm going to teach you right off the bat a little bit about selling premium. When we talk about selling premium, that whole concept like eludes people because some of you they've never had options experience at all. So I don't even know what premium happens to be, but let's take you into a brief example here. And let's say we went out, okay? We go out and we're gonna sell, okay, in this case, a 60 call. And for that 60 call, I'm gonna collect exactly a $1 credit, okay? So I'm gonna take it down here and just write it up. I'm gonna go sell 60 call equals a $1 credit. I'm going to drive you crazy. I'm going to say that this option is good for 2 months of time. All right. So I've started off with this very simple example where I go out and I sell a call. Now, some people that are tuned in today, they don't even know what a call happens to be. They're like, well, what is a call? And that's exactly what we're going to focus on before we go any further. So this first example, I am absolutely selling something naked. No, I don't like it. You don't have to like it. I'm just using it to get conceptually you familiar with the idea of selling premium. That's it. I'm just using this conceptually, right? So when you trade options, okay, first and foremost, you don't actually have to take a position in stock. It's a $50 stock, but who cares? Like it doesn't matter that this is a $50 stock. It's just, hey, the bottom line is you have this underlying and you can just trade the options around it. You just buy or sell the options. Now, most of the time people go out and they learn to buy options. So let's start from that side of it. When you go out and you buy a call, what is a call? Call gives you the right to buy. So let's say that, forget about the fact that I sold a 60 call. Seriously, forget about it, okay? So forget about it. We sell a 60 call, it doesn't make sense. Let's start with the buy side. You go out and you buy a 60 call. What does that give you the right to do? For those of you that have no experience, well, buying a 60 call, and by the way, buy is with palms towards me. Sell is palms towards you. Anyway, you go out and you're on the buy side of a 60 call. If you buy the 60 call, what do you have? You have the right to buy the stock at 60. You go, but I thought you didn't have to trade the stock. You don't have to trade the stock. If you go out and buy a 60 call, all you're doing at that point is saying, like, I know the stock is at 50, but if I buy a 60 call, I have the right to buy the stock at 60. What if the stock goes from 50 and jumps all the way to 70? You'd be like, I am gold, Jerry, I am gold. So if the stock goes from 50 and jumps to 70, you have a 60 call. You have the right to buy the stock at 60. Everybody else in the world right now has to pay what? 70 for it. So think about this. If you have the right to buy, okay, you can buy that thing at 60. Everybody else in the world has to pay 70. That thing is going to be worth at least $10. At least $10. You're like, oh, we paid $1 for it. Okay. Does that make sense to everybody? Are we okay with that so far? So that's the buy side of options. But you have to also understand, you just paid $1 for that little monkey that's way out here. What happens if the stock doesn't go up? If the stock stays flat, you lose $1. If the stock goes down, you lose $1. Even if the stock goes up, stock goes right to 55, you still lose $1. Like, you know, when you buy a 60 call and the stock's trading at 50, it's kind of a trade where I would call it this. I would call it like, it's a wing and a prayer, because you're like, oh, please let the option gods be with me. Let the stock go to 70. That's a pretty big jump. A $50 stock jump in the 70s, that's some big boy stuff. What's going to happen to the 60 call most of the time? You guys tell me. What's going to happen to the 60 call most of the time? Anybody? What's going to happen to it most of the time? Most of the time, the 60 call will what? Okay. I was looking for the term expire, but 0 is fine. Only like one person comes in here. This is a very quiet group. It's okay, people. You can come out, okay? You can come out, you can talk. Probably going to expire worthless. Almost unequivocally, it's going to expire worthless. That's a really what we term a low probability shot. And it is, right? And you're going to burn theta. I love that. Somebody said you're going to lose theta, and you are. Theta is actually the daily whittling down of an option's value. It's inescapable. All right. But the point I'm trying to make over here is it's a little bit of a wing and a prayer. So in this particular case, like, I just want you to understand, you can buy a 60 call, but if you buy a 60 call, you don't need a $10 move to the upside. You need $10, another dollar just to be able to break even. You need it to like 61 just to break even. And then quite frankly, you need the stock to go even further. It's a very low probability trade. Here's the thing. Starting, okay, after like COVID, people started doing what they call like, they literally term them like YOLO trades. YOLO is you only live once. And what it basically means is you went out there and be like, roll the dice, buy an out of the money call, and boom, the stock flew to the upside. Most people that did that have been absolutely, they've been decimated. They've just been decimated in this business. It works when it works and it doesn't when it doesn't. You just, like if you were in GameStop, beautiful, like you made some money. The reality though, you're in it right now. I mean, if you looked back at markets, historically speaking, with decades of volatility, you're in it now. If you're a stock picker, you're dead. You can't pick stock right now. What are you going to do? I guess if you're going to pick a stock, you got to pick a stock that's, going to go down. That's because nothing is going up. We're going to time the perfect day. Today's the day we're going to go up, unless of course we go down. It's almost impossibility. We're actually going to teach, and again, conceptually speaking, let's go conceptually first. We teach you to sell premium. In this case, assume you own no stock. I don't own stock. I don't want to own stock. I don't have to own stock. I'm just going to go out and I'm going to sell a 60 call naked. Now, is that bright? No. I don't want to just sell it naked because I got all this risk, but I want to teach it from a conceptual point of view. All right. So go out and sell a 60 call. Then what do I do? First of all, how do you sell a 60 call? You're selling yourself into an obligation. Okay. Because if I sell a 60 call, what am I obligated to do? So I could go out right now and sell something and you go, how can you do that? You never owned it. You're exactly right. I never owned a 60 call and I'm opening the position by selling it. You're selling yourself into an obligation. I'm selling somebody else the right to take stock from me at 60. You go, but Don, you don't own any stock at 60. You don't own it at 50. You don't own the damn stock. What? Well, I'm selling a 60 call anyway. Because if I sell a 60 call, I'm obligated to give somebody stock at 60. What happens if the stock stays flat? If the stock stays flat, I keep my dollar. Why? Because who wants the right to buy the stock at 60 if the stock's trading at 50? Nobody. So I get to keep my dollar. It's 2 months from now. What if the stock goes down? Down is good because I keep my dollar. What if the stock goes up? It goes all the way to 55. You go, oh, we're getting close, but I still keep my dollar. What if the stock goes right to 60? You go, oh, I wet myself, but I still keep my dollar because who wants the right to buy the stock at 60 when the stock is trading at 60? Nobody. When do you really start taking heat? Let's say the stock jumped from 50 all the way to 70. It's like Twitter that, one day was trading for nothing. The next day was like getting musked. Anyway, okay, scent of musk. Stock jumps to 70. You're like, ah, because if it jumps to 70, somebody goes, I want my right to buy the stock at 60. And what are you? You're in big trouble because if the stock jumps to 70, they have a right to buy stock from you at 60. Do you own any stock? You go, I don't even own the stock. You go, great, because you got to buy the stock at 70 and then give them the stock at 60. But you never, ever have to trade the stock. You don't have to have the money in your account to trade the stock. Listen, if you take a loss on one of these things, it's just basically, it would be a $10 loss, but you also collected $1 up front. So you'd really only lose about $9. But that's the probability. Okay. And you go, what do you mean that's the probability? It's the problem, if you will, with some of these high probability trades. Okay. High probability trades can lead people into some big, big issues because by selling a 60 call, you make money 9K out of like 10 times. But in the 10th time you do it, what could happen to you? Anybody? Okay. The 10th time you do that trade, you're like, this is going to hurt because eventually you're going to get beaten up on it. All right. We okay so far? Making sure we're okay. Because now we're actually going to go into a live market. Let's blank everything. Because you look at this and you're like, that's an interesting fictitious example. How fictitious is it? Let's go into a live market. Do we have a stock that's trading around 50? Anybody? Is anything worth $50 anymore? Isn't that messed up? A couple of weeks ago, I was like, is anything trading at 50? And be like, oh yeah, man, there's plenty of stocks at 50. I'm sorry, nothing is left at 50 anymore. We just went right from 50 down to 30 and just keep right on going. I was using Intel only a few weeks ago as an example, and it has seen better days. Again, it's a few weeks ago. I was using Intel an example at 50. I'm not joking. That is, a few weeks later. Anyway, I'll use Intel for an example just to make a quick point. I'll go 66 days out. Let's open up just every single option in here. Just to, again, when I say I want to make a brief point here, you can even open up these things where it says probability OTM. That means probability out of the money. If you guys are familiar with thinkorswim, it's good. Okay, if you're not familiar with thinkorswim, that's okay too. A lot of the calculations in here, although I ran education, had a lot to do with the input on here of a lot of things like probability out of the money, the implied volatilities, expected moves. I mean, this thing was kind of our baby. Anyway, if you take a quick glance, here's Intel trading at 43. I just want to make just a brief point with this, that, here's Intel trading for 43, and you could go out right now and create a trade, 85 or 90% probability, you get to collect like 65 cents. And that's it, okay? And you can literally, if you wanted to sell this option, you could sell that option right now, okay? And you go, who's gonna buy it? Market making firm. The market making firm is making a market of 62 at 65, all right? So you can buy as many as you want here, sell as many as you want here. You can carve up the market in between. That's all fine. It's all fine and dandy. Now we're actually gonna take it a little bit into the marketplace. Now, somebody who's mentioned like silver, okay? Yeah, you can trade SLV in here. Nothing wrong with that. It's a $20 product. $20 product, but some of the commodity products right now, I'm gonna tell you something, man, these are some high risk markets right now. They are some high risk little monkeys. This thing just got absolutely, crushed. But that's some of the higher volatility that we've seen in terms of some of the metals. So with this, let's continue on. So when you're learning to sell options, selling options, okay, equals positive time decay. And positive time decay, that basically means that every day that passes, you're seeing like the dwindling, of an options premium. So as time passes, the options you sold decay exponentially. So we're going to review time decay. Now, almost everybody in here has seen this decay graph. Even those of you that have never traded an option, like everybody kind of rationalizes that that's the way options decay. Am I right? Okay. And most people go out when they learn options, they learn, for instance, to buy, let's say, a 100 call, and the 100 call is trading for $3. So right here, you buy this 100 call, it's trading for $3. And then the moment you buy that option, it starts to decay. By the way, this option here that I drew, let's say it's good for 1 month. Everything you trade is going to be good for a period of time. So this one's going to be good for a month. You buy a 100 call for $3. Own it for a couple of days, it's going to drop in price if the stock doesn't move. Now it's only worth 280. How many people have had this happen? You buy a call option, the stock doesn't move just for a few days, and the option only loses like kind of minimal value. Anybody had that happen? Okay. And immediately your first thought is, when the option goes for $3 and drops 280, you go, I'm okay, right? This is going to be okay. And then before you know it, the first week passes, you only lost 20 cents. Then the option drops a little bit more rapidly. Now it drops to $2 and you go, move. And then all of a sudden the thing is actually trading for what? 80 cents. And when it drops to 80 cents, you're like, oh, screw it. And then of course it goes to zero. Has anybody ever lived through that? Where, you had a $3 option. I'm okay. I'm in trouble. I'm screwed. Zero. That's the life. It's the plight of the options trader. Here's one thing that I want to explain to you about this decay graph. There is a reason that I bring up the decay graph, on here. That's the decay graph that most people are familiar with. That decay graph is also a huge misnomer. Yes, options decay like this. By the way, I'm pointing because my screen is in front of me, but options do, in fact, decay like this. But this happens to be what we term near money options. Basically, what that means is this is the decay graph, of stuff that's like, if it's a $100 stock, you're trading the 100 calls. We're not going to do that. We're just not going to do that. I'm going to show you a completely different amount of decay. I'm actually going to show you something that's going to shock you, because so few people are familiar with this. And then even those of you that are experienced, you may ask yourself, how did I miss this? Or how come, there's not a bunch of other firms out there teaching it? Very few people are catching this. By the way, the professional trading world, there's papers written about this now. All right, the shift of Ultima, there's literally papers now written about the shift in skew and the shift in time premium. Now we're going to get into a much more serious example. I'm coming into a $100 stock. Do I own the stock? No. Do I want to own the stock? No. Why do I not want to own the stock? Because I don't want to own the stock, all right? It's tying up $100 a share. It's crazy. You own a $100, stock, thing could be trading at 80 bucks. Most stuff right now is down 20, 30, even 40% year-to-date basis. Am I right? So I don't want to own the stock. In this particular example, I'm going to go out and I'm just going to throw it out there. Okay. Only thing I'm going to do, and again, conceptually, I'm going to sell. Okay. You ready? A 120 call. And on that 120 call, again, I'm going to collect exactly a $1 credit. So I'm going to put it over here. I'm going to sell a 120 call, collect a $1 credit. Now I'm going to torture you. This one is going to be good for 3 months. You look at the 3 months and immediately everybody balks. They go, I don't want to wait 3 months. You told me I could make money every month. That's correct. Just sit tight for a second. We're going to go out and we're going to sell a 120 call. Why a 120 call? Because the 120 call is like in the nosebleed seats. This thing is so far out of the money. You can't see it. You can't smell it. It's out there, baby. And you're loving every minute of it. You sell on the 120 call. You are 20% away from the stock price. Can the market still get you? I'm sure it can. Like this could be a really volatile underlying, but when you look at this, you go, I only collect $1. Don't worry about that. You can collect whatever you want to collect. You want to sell a bunch of them, sell a bunch of them. So your heart's content. But you go out there, you sell a 120 call for $1. Now, after you sell the 120 call for $1, what do? Everybody's doing something. Me, I'm doing nothing. Because I'll tell you what can happen to the stock? Stock can stay flat. If the stock stays flat, I'll collect $1. If the stock goes down, I'll collect $1. Even if the stock goes up considerably, I'll collect $1. As I said, I'm selling nosebleed seats. The 120 level is so far out of the money. This is what we call out of the money. It's so far out of the money. If you're watching a ball game, you're sitting in the parking lot tailgating. You're not even in the stadium. That's how far out of the money. Again, this is 20%, what we call OTM, which is out of the money, 20% out of the money. So you collect $1. You're like, oh, big whoopee, I collect $1. Even if we come up to 120, you still collect $1. And by the way, speaking of which, you could see that stock coming from a mile away. You're like, here it comes. It's coming for me. When it gets to 110, okay, when it gets to, 115, you have all this time. But the point being here, okay, is I'm selling something that's dramatically far out of the money. Let me ask you something. What do you think the probability in that trade is? Anybody? What's the probability in there? Probability of making money in here? It's extraordinarily high, okay? Extraordinarily high. And you collect a whopping $1. Now, what's wrong with this? What's wrong with this is risk. That's always a risk problem, right? Because if you sell this thing naked, forget about even margin. Because if you're worried about margin, I can circumnavigate margin. The problem with this trade, though, is the risk, okay? Because if you're at 100 and that stock went to 150, you're in trouble. I mean, it could go from 100 to 150, you'd be in trouble. And you can mitigate that, okay? Probability here, though, would probably be incredibly high. Incredibly high. It would probably be upwards of like 90%. In fact, with that 90%, let's do it. Let's actually just go into the real marketplace. Okay, forget this. And people look at this and they say, well, why did you go so far out in time? Why did you sell options so far out in time? You may have noticed in my example, I sold options, okay, a few months out. This is the part where I'm going to blow your mind. Typically, when people learn to sell options, what do they learn to sell? Short-dated stuff, right? That's why you're actually tuned into this webcast. You're about to learn what Ultima is. You're about to learn what skew has done to shifting the markets, okay? And again, I am going to stress to you, by the way, I'm using calls right now because calls are just easier to interpret. People like immediately like, well, can you sell puts? Of course you can sell puts. You sell puts, sell calls, sell whatever you want to sell. But again, I'm just trying to get to the conceptual side of it. One of the things that drives people crazy is they go, I don't want to sell something that has 3 months of time, Don, because if it has 3 months of time, I'm going to have to sit here and do nothing for 3 months. And I don't want to do that. Not at all. That's exactly, again, right? What we do here at TheoTrade is criteria. What we do is we actually specify what options you're supposed to actually be trading. What is Ultima? Well, now you're about to see what Ultima is. Let's go into the live market. Okay. So this is a live market. This happens to be the thinkorswim trading application. If you're not familiar with thinkorswim, it's fine. I also trade on Tastyworks. Okay. It's one of two brokerage firms that I predominantly use. When it comes to trading, these two are the best right now. There's nothing, comparable in the marketplace at this present time, but these two happen to be, some of the best firms pretty much on the street for a little bit more active traders. And a lot of people are familiar here with thinkorswim. And again, this was my baby for the better part of about 15 years. So I'll just show you a quick example on thinkorswim. Okay. How many people here, by the way, use like thinkorswim, Tasty, right? So there's never like something I can't answer about this platform or Tastyworks. Like we know the platform's cold. There's every calculation in here. Okay. I spent like 7 years working specifically in the mathematics of this platform. So I'm actually going to go ahead and type in the spiders. So I'm going to go ahead and type in the spiders. And with spiders, I'm actually, by the way, what are the spiders? The S&P 500. It's like probably the most marquee of marquee products. They're down $2 today. By the way, look at this run in the spiders. Ooh, boy, oh boy, oh boy, that is gonna hurt. I mean, this is craziness. People, they can't tick up. But I'm gonna look at the S&P 500 and the spiders. And for this first example, I'll tell you what, I'm gonna get crazy. I'm intentionally gonna go out 101 days. 101 days. You go, why are you doing that? Would you rather I go out 130 days? I'm going to go 101 days out. Now, first and foremost, before I do this, okay, look, and you can see I've got positions in here, so you're going to see some of my positions for better, for worse. You have a 101-day option and you have a 66-day option. I'm actually initially going to select 101 days. How much distance is there between these options? There's about 1 month. Okay, it's 34, 35 days, right? It's about 35 days between those two. Okay, but bear with me. So I'm going to open up the 101-day options, and I open up every strike. And I'm going to make sure I can see, let's pop delta in there. And we're going to scroll in, and I'll put probability over in this other one, probability out of the money. You know what? Just for this example, let's pick something right around $1, shall we? And the reason is I've been using examples right around $1. And ironically, here, I happen to have a position right here at the 470. So I'm going to write this up so that you guys can see it and take you through this example. So I'm going to go out to the 19th of August options. And with those, I'm going to sell, okay, a 470 call. And what am I going to collect? Please let me just round it right now. Exactly $1 credit. Does everybody see what I'm doing here? It's a $1 credit. And you go, you can't get $1 right now. Well, I can't get $1 right now, but I can still try to sell it for $1. I don't really care, right? Like if I don't get filled right now, I'll get filled. Here you go. Let's just send that one off. Sending my troops into battle. If we rally, I'll fill. But I'm only 2 pennies, like, let's say 3 pennies off the mark. 3 pennies off the mark means the mark is 97 cents. Mark is mid price. 97 cents is the mark. I'm trying to sell for $1, so I'm 3 cents off the mark. Now, time out. Let's assume I just sold something for $1. Now what do? I go, I do nothing. Everybody's doing something. I'm going to do nothing. I already have a position in there, and I'm probably going to suggest that it's a decent sized position in here. Okay, I'm short 5 of those, and I know I'm short a bunch of 5 lots all over the place, but anyway, so I've already sold those, and I'll sell more. That's fine. Okay, but I want to sell them for $1 just to make this example, pretty clean and congruent with what I did earlier. So I sell them for $1. Now what do I do? Nothing. Just bear with me on this thought. Let's assume that nothing has happened over the next month. I know markets are going to go higher. I know markets are going to go lower, but just bear with me for a second on this thought. People always tell me, they go, are you serious? Like I'm selling something 101 days out. I'm going to have to wait for 100 days to collect $1. That sounds so stupid. Why would you ever do that? That's not a good use of your capital. No, it's not a good use. It's a phenomenal use of my capital. Because what you're not familiar with is this. The decay out here is incredible right now. That's what changed. Look at the 66-day option. You go, what do you mean? Well, here's a 470 call trading for $1. That one has 101 days. Let's look at a 470 call with just 66 days left. Why should we do that? It's just like fast forwarding time. Okay, here we go. There it is. Did you realize that just 35 days from now, 35 days from now, assuming the market stayed flat, which is not going to do, it's going to go up, it's going to go down, but whatever. Okay, 35 days from now, I could turn around and buy the 470 calls back. What would I pay to get them back? Basically 35-cent debit. What did I make? 65 cents after commissions and everything. Let's just make it what? I made 60 cents or 60% for doing nothing in 35 days. Why are you not doing that right now? And you know what people are doing? People are being taught to sell options with short amounts of time, which is ridiculous. So I only have to wait 35 days to make 60%. You would have to wait an additional 66 days to make 36 cents. It's absolutely ridiculous. Okay. If you miss this, even Goldman Sachs, they're the ones who wrote the paper about this. Okay. They wrote a huge white paper about how skew changed and how good premium and skew is in the back month. And they even discussed Ultima. Okay. That paper only came out at the end of 2021. We've been executing in this since 2020, since right after COVID and the onset of COVID, because all these retail customers jumped into the marketplace. Things went haywire, volumes went crazy, skew shifted out here. It's incredible. And people look at this, they go, it's an interesting example, but could you do it in another product? Of course you can. Let's actually, I like to keep it like spiders. By the way, I like the spiders. The spiders, they can't get taken over. Somebody bought the S&P 500. It's not going to happen. Let's look at the QQQ. Could it be the same in the Qs? All right, here's the Nasdaq. Here's the Nasdaq. Now, I don't mind bringing up the Nasdaq. And look, it's the same thing. By the way, you see, I got positions in here. Wait, anything I'm going to talk about, I just make no two ways about this. Okay, there's, talk is cheap. Here, you want to see what my theta is? That's my theta. And this is not a big position. That's my theta. Okay, I'm collecting $447 a day. Doing what? Taking almost no directional risk. So I've got $447 a day, okay, in positive theta, which means if today passes, gosh darn it, this marketplace likes me and I'm going to collect $447 for doing nothing. And again, I'm taking very nominal amounts of directional risk right now. But when I say this is when the rubber meets the road. Okay, here's some of my positions inside of the Qs. Here's some of my positions inside of the spiders. Okay, it doesn't matter if, I know you guys are trying to explore them and try to figure out what everything is. Good luck with that. I like to take a little bit and sprinkle a little bit around. You want to see some bigger positions? Well, here you go. That's the S&P options and futures. That's when you're ready to go big boy. Those are much bigger. Those are 5 times the size of the spider contracts. So if you see a 2 lot, you're like 2 contracts isn't that big, and the S&P options and futures it is. Okay, but this is again, this is not that big of a position. And this is actually what we term the Theo theta portfolio. Okay, Theo theta. It just simply means theta is what? Daily whittling down of an options value. Okay, so I could do this in the QQQ as well. In fact, again, I've got positions on in the Qs. I just go out 101 days. Okay, here, look, you can see I've got positions on over here, but let's just find an option around $1. There it is. Look, there's the 374s. They're trading for what? $1. Okay, you know what? I'll even use a 375s. Nice round number. 375s are basically trading 92 at $1.03. I could sell those all day long for about $1. Okay, what are they going to be worth? They're trading for $1 right now. What are they going to be worth 35 days from now? Close that up. Open up the 66s, 66-day expiration. Okay, look out at the 375s. Here they are. Okay, what are they trading for? Half. Trading for half, trading for $1, then they're trading for basically 50 cents. Should be able to make in 30 days, you should be able to make about 50%. okay? And that's, well, we rely on that extensively. We rely on that. I mean, that's what this is about, okay? Why do we sell options so far out in time? Because there is phenomenal decay this far out in time. As I said earlier, when people were talking about this decay graph, it's a total misnomer. Like, this is what decay looks like in options that you trade that are near money. The decay graph right now, though, works phenomenally, selling options further into the future. Now, this 90% sounds great, okay? But what you have to worry about in this trade isn't that you're going to make money. What's the biggest risk in here, okay? I mean, I just showed you, I don't mind mentioning this, but I'm showing you these trades and, I'm opening up my position, and what if things go awry? What if, like, because 90% sounds great, but 10% of the time the market whoosh, just explodes or crashes, okay? And when you trade high probability strategies and you're wrong, they take out the 20-pound sledgehammer and they just plunk right on your head. You got to understand it. And anybody here that's ever traded these strategies, again, how many people have sold some premium? Me. I asked that question already, but for those of you that have sold options premium, you know what happens? You go out and you learn a strategy like iron condors, right? Iron condors. Some people have traded them. What is an iron condor? You sell a call, you sell a put. You buy a call, you buy a put, sell a call, sell a put, buy a call, buy a put. It's actually 4 transactions. By the way, it looks just like this too. It's 4 transactions all done as one trade. And you learn to do it. Okay. You took a class and they charged you $500 to learn an iron condor. Okay. You know how it happened to iron condors? The very first iron condor you do, you make money. Okay. Okay. By the way, I just filled something for $1. Forgot about that one, didn't you? Forget about it. Right. So you can't fill it for $1. Yes, I can, because I just did. So when you go out and you learn this stuff, again, you go out and you learn to sell an iron condor and you collect $1, right? And then it worked, and you're like so shocked because you took this class for $500 in the very first month. You're like, oh man, this is the greatest thing ever because it actually worked. So the next month you do like 5 contracts in the spiders of this iron condor and you make money on those too. Now, it never dawned on you that you're doing a trade that has a 90% probability of success. Of course it's going to work. So the first month you made money, the second month you made money, the third month you're starting to like squawk your feathers. You're like, oh God. And you actually go into a product called the SPX, because the SPX is 10 times the size of the spiders. You're like, I'm gonna be the next Warren Buffett. So you traded a 1 lot in the spiders and made money. You traded a 5 lot in the spiders and made money. Then you traded a 1 lot in the SPX, and holy crap, you made money on the third month. On the fourth month, you do 10 contracts in the in the SPX. You do 10 contracts in the SPX. And the market was like, come on, come on. The second you put on those 10 contracts in the SPX, what happens? The market goes, we got one. Train wreck. Your losses are going to not only do your losses exceed what you made in the previous 3 months, but it also takes half your account with it. And if, by the way, anybody here that has ever traded an iron condor, please, in the chat room, by all means, come clean and say, that happened to me. And then literally you lose half your account. I say on the screen over here, I go, I know, it's like I could see your account. 15 years I could. 15 years I watched people put on iron condors. You will not succeed in an iron condor. There's like no edge anymore in the iron condor. It's an efficient strategy. What that basically means is you make money, you lose money, you make money, you lose money. If you actually traded 1 million iron condors, okay, your P&L should basically be 0 over time. It doesn't have edge. It just doesn't have edge. And then, by the way, those that have traded iron condors, so you took a class and you paid $500 to learn to trade iron condors, then they sell you another class that teaches you how to fix it. Fix is a very dirty word in trading. I know I can do it. I know I can do it. 15 years inside of the brokerage world, I've seen everything, but I'm totally a cynic when it regards like good trades gone bad. People literally get a shovel out and just start digging. Okay, I'm like, just keep going for it. Anytime you're fixing a trade, okay, by the way, fix is just this hideous word because it's what is fixing really doing? It's throwing more good money into an already losing hole, right? By logic, you can't fix something without more transaction costs and more risk. How can you fix something? You go, I'm not fixing it. I'm morphing it. Morphing it into an amalgamation of garbage, all right? Some fixes work, but the very notion of fixing throws more good capital after bad. You got to learn how to do this the proper way. Listen, when things go against you, you got to throw it out like yesterday's trash. You know, this is a statement that, and I guess an analogy that I've used for years. If you took a car and you drove it off of a cliff and you brought the car to a body shop, what would they tell you? They'd be like, it's totaled. Just forget it, man. Just go buy another one. Here, let the insurance company total that car out, bring it to a scrapyard. They'll make it a nice box and go get another one. You go, no, no, no. I want it to look exactly like the original that I bought. And they go, okay, you're insane, but hey, it's your money. I mean, literally, people will throw more money, okay, than they initially had because they get caught up in this whole idea that I can't be wrong. Let me tell you, you can be wrong. You're going to be wrong. You should get that through your head right now. You need to learn to do this right. You got to learn how to like structure trades. Now things are about to get a little bit more serious. Okay, selling options premium. So when I show my account a little while ago, okay, it doesn't matter what P&L is. I'm serious, it doesn't matter. Okay, and you see this account right here, the premium selling version of this account. When I say premium selling, the part that's selling options is this TheoTheo portfolio. This is the portfolio. Okay, one of the most important things is right there. I'm collecting now about $440 a day of what's termed theta. That's the symbol, okay, for theta. All things being equal, I'm going to make $440, okay? Today, I'm actually up about 2 grand. How can that be? Volatility, okay? Volatility changes, it's actually helping me a little bit. Neither here nor there. Next up on the docket over here, okay? What you have to understand about selling premium is this. A lot of people will go out and they will learn to sell premium. When I say sell premium, okay, here's a stock and let's make it the spiders. The SPY right now, let's say the SPY, whoops, apologize. The SPY is trading at, let's say 400 even. Sound good? You're going to go out and you're going to sell a call. Then you're going to go out and you're going to sell a put. You might be selling like, what did we just sell a moment ago? I think I sold like the 470 call, right? And you'll be out here and you'll be selling like the 290 put, okay? So you sell a call and sell a put, and then you could turn around and maybe sell like the 500 call if we rallied, maybe sell the 320 put, okay? So all of a sudden you're putting on these positions, and what can the marketplace do? All right, what can this marketplace do? This marketplace could explode higher, or the marketplace could, the beast could be unleashed, and all of a sudden, boom, it's a crash. And the S&Ps are sitting at 200. We go from 400 to 200, literally like a 50% drop in a matter of weeks. What are you going to do? I just want to know, because the thing and the fact of the matter is people get themselves in huge trouble. They get themselves in huge trouble because they just go out and sell naked and kind of feel like, oh, it's going to be free money forever. You know, what we're going to teach you to do here at TheoTrade is to be an inventory manager. That's all that I do. When I say inventory manager, okay, what I want to show you, and again, I don't want to intimidate you, because the complexity of this portfolio in here, this one's actually designed to be a little bit more complex. Here is a very, very basic portfolio. When I say basic portfolio, okay, I'm only trading one product. I only have a handful of positions on, okay? I'm only tying up $3,500 in margin. Each and every one of you can do this, but I am an inventory manager. What does inventory manager mean? Okay, like I basically buy and sell apples. I go out and sell the apples, buy them back, sell the apples, buy them back. Sometimes you get some rotten apples, but to be an inventory manager, you have to learn, okay, how to hedge. Why? Okay, you can't take extraordinary amounts of risk. Because if you take extraordinary amounts of risk, sooner or later, what's going to happen? You're going to take extraordinary losses. So what we're going to do, okay, is I am fully aware that that SPY is trading right at about 400, right here, right now, okay? I'm actually going to go create some inventory here, and I'm going to create some inventory here. Then what I hope happens that we stay somewhere in this range. Does that make sense to everybody? Okay, so I sell a bunch of junk out here and I sell a bunch of junk out here and hope we stay in this range. What happens if we don't? What happens if we don't? We have hedges, we have umbrellas. If the market rips to the downside, we're going to have a hedge on, and that hedge is going to explode in value and literally cover our risk. If we explode to the upside, I'm going to have a hedge that's actually going to cover not all of my risk, some of my risk. Okay, we are going to have like a little umbrella package to mitigate exposure if we make a big move up and a big move down. The one thing you're going to learn here at TheoTrade, we don't leave anybody out there in the breeze. We don't leave you out there naked. Okay, enter again the hedges. All right, there are several hedges that we actually teach here at TheoTrade. One of them, okay, is known as a risk twist spread, better known as RTS. The next one here is known as a VIX vol spread, okay, or a VVS. The final one, okay, is what we term a gamma iron, okay. Those are three hedges that we predominantly use. Now let me explain in the most simple terms. So here we have the SPY trading at 400. Now, do I own the spiders? Do I want to own the spiders? Why not? I don't know. I have $400. Thing just tanked from what? We were just at 480. Now we're at 400. That's not going to be a good investment. Okay. So what am I going to do with the spiders? I'm just going to trade their options, and I'm going to control risk. Okay. How am I going to control risk? See this thing right here? It says VIX volatility spread. The easiest way to explain this. What is a VIX volatility spread? A VIX volatility spread is a risk mitigation tactic. Okay. What it's designed to do is this. If the market goes down, where does the VIX typically go? It doesn't have to, but where does the VIX typically go? If the market goes down, the VIX goes where? Anybody? By the way, these are not rhetorical questions. Jump in here. This is the the Q&A. All right. The VIX typically goes up. It explodes up, especially with a fast, vicious move to the downside, especially right now. VIX is poised at like 33, 34. If we go down from here, we go down big, oh, it's going to tear. It's going to tear up to maybe 50. It's going to be crazy, right? So if the market goes down, the VIX goes up. Imagine you place this very inexpensive trade, okay? This very, very minute trade that just sits poised in the VIX. And if the market tanks, that little VIX trade goes, it ignites, boom, it explodes. And why does it explode? Because it's there to actually cover your risk if we crash and burn. Do you have to pay something for it? Yeah, you always have to pay for a hedge, okay? But you know what? You're driving around like a Ferrari or something. What are you going to have? No insurance whatsoever, okay? Is insurance going to cover the whole entire cost of the Ferrari? It's probably not going to be 100%, but it's pretty good. It's better than driving around with absolutely nothing. Or like where I am. I'm driving around in an island that has potholes that are more like craters. What I'm going to do is teach you a little bit about position structure here. What we do, here's the market at 400. So I am going to go out and I'm going to sell like I was doing earlier, the 470 call. I'll collect $1. I'll eventually sell, okay, I don't know, it could be like a 490 call, all right? And that one, maybe I collect like 90 cents for, and then I'll turn around and I'll sell, okay, something eventually if we keep tanking, like a 450 call, collect another $1 on it. Simultaneously, I'm out here selling puts. I might be selling right now. I mean, this is crazy. We could probably sell a 280 put. That I'm going to collect almost $2 for. Market sells off a little bit more. I'm going to be selling, for instance, 260 put, collect another $2. Before you know it, okay, you're selling 300 put, collect another $2 on it. All of these are relatively effective prices. So I've actually constructed, okay, a little bit of inventory. Notice it's scattered. I don't put all my risk at one spot or the other. And you look at this and you go, how are you going to protect yourself? Okay, here we have laid right in here, right there. We have VVS. That's a VIX volatility spread. To the upside, we actually use, okay, what is termed a gamma iron. It looks like this. If the market explodes up, we'd have to catch the gamma iron before we can take a loss here, meaning that the hedge is inside. Okay, the hedge is the market bursts to the upside, boom, the hedge catches you. If you want to exit these trades, okay, you can exit them because the hedge actually caught you and the hedge was actually profitable. If the market comes tearing to the downside, the VIX volatility spread puffs up in price, boom, gives you an umbrella, gives you coverage, all right, for the risk that's down below. Nothing is naked, everything is hedged. This is the structure of selling options premium. Initially, when you look at this, you're like, man, that's a little out there. He's pretty intense. Okay, you want to see it in action? Okay, here's one product. This product actually has a hedge built in. There's my hedge right there. Okay, and you go, well, that hedge though, the hedge doesn't even kick in till 3,800 on the S&Ps. And you go, will the hedge help me? I want to show you something. Okay, because yesterday I had to use my hedge. Right? When I say yesterday I had to use my hedge, yeah, yesterday wasn't really a rough day, but I'm actually going to show you. Yesterday I used my hedge. When you say use the hedge, I'm actually going to show you exactly what I did yesterday, pretty much verbatim. This is inside of my account, every position. Okay, here's the hedge. This is a $100 wide hedge. What did I pay for it? $21.25. What's the hedge worth yesterday when I sold it? Here it is. Hedge was worth $77.75. That hedge actually collected what? $50, $60. It's unbelievable. The hedge actually saved me, let's call it plus 60. Did I lose any money on the premium? Nope. And I re-upped a new hedge. Okay. I am in a beautiful position, just a beautiful position. Now, somebody said, can I use this with a $2,000 account? Of course you can, but with a $2,000 account, you're going to trade a little bit smaller. Right here, you can see I'm tying up, okay, $3,500, but this is an IRA. You actually, if you did not have an IRA, and this is a regular taxable account, tie up half this. It would only take up $1,700 of buying power for all of these positions. Okay, this is a great inventory. Right? Again, I actually had to use my hedge yesterday. That's how serious this market is. But I'm not taking any losses, people. Okay, we're actually doing quite well in today's marketplace. Listen, this is what you want to learn right now. You're going to need this in your life. If you think that volatility is going to go away, okay, hey, maybe you're right, maybe you're wrong. If you think the Fed is eventually going to back down, sure, why not? I'm going to tell you right now, markets, they may not recover for years. You know, let's say realistically, you're 3 to 5 years out before things are probably going to calm down, before skew is actually going to normalize. Okay, premium selling is going to be the way you're going to get through this. It's just no question. You are going to need something other than just going out there. And what are you going to do? Try to find stocks to buy? Yeah, you're going to buy a call option and hope the market goes up, but volatility is too high to do that now. Listen, okay, this is why you want to sell premium. You can sell premium in accounts even worth 2,000. Again, I put 5,000 in here, and I want to reiterate why I put that in there. The $5,000, okay, is distinctly for IRA, and you can do anything you want now in an IRA. Produces positive theta. You saw my account. I'm positive about $440 of theta, and that's a small. That's just one account. You can enhance existing positions. If you do own Microsoft and so forth, we can teach you to sell premium against your Microsoft or Apple. Provides a high probability of success, incredibly high probability. And over 90–95% of the time, nothing happens to you. But I wanted to show you, like right now, because everybody's going to question, the market's tanked in the last couple of days. We're not just fine, we're killing it right now. Absolutely killing it. The harder the market goes down, the more we're actually selling into the volatility. Bring the pain, okay? Bring it. You never need to buy or sell the stock. I'm not doing anything with the stock. You got to be crazy to trade stock right now, okay? Article came out in CNBC yesterday, and it said of 53 IPOs, 3 of them are actually higher than the initial public offering price. That was the 53 IPOs, okay, of 2021. 3 of them are higher than the IPO price, okay? Of those out of 53, over 50% of them are less than 50%, okay, of their IPO price. Most of them are down 70%. Forget buying stock. It's over. It's over for the near term. Okay, you're going to buy stock out there, you're going to get crushed. You can be wrong on market direction. Now, that's a critical aspect over here. You can be wrong on market direction, and still produce profitable trades. One thing, and I don't express this often enough, but I want you to see it inside of the account here. Okay. One thing you got to realize, this account, and this seems like a little bit maybe esoteric, okay, but I'm taking 111 SPY deltas of risk. What that basically means is this position only has the risk of 111 shares of SPY. Almost every one of you has more risk than that right now. 111 shares of spiders. You're like, oh man, I have way more risk than that. If you have a 401k or an IRA, okay, listen to me. You have to do something. Just don't sit there and do nothing right now. Okay, selling premium can potentially bring in really consistent returns while minimizing your risk. But you've got to learn how to do it, right? So if you want to learn how to do this, in a moment, we're going to discuss criteria. But before I get into criteria, when I talk about criteria, people look at this, they go, okay, great. I sell premium further out in time. Check, I got that part, okay? What else do I do? Criteria is all the nuances. How far out in time do you go? Okay, what do I buy? What do I sell? What volatility should I look for? What products do I trade? How do I do this with lower margin? Every single nuance. Criteria is an extraordinarily definitive recipe, okay, that takes you step by step, not only in, but then out of the trades. This is like, we built criteria that is as clear and concise as like baking a cake. Step 1, step 2, step 3. You have to learn the proper steps to enter into an ultimate trade. Before I get into criteria, I'm actually going to show you a couple of my live trading examples. So variations of all of the following trades could be done with as little as $2,000. I've mentioned that time and again, $2,000 in a funded brokerage account and can be done inside a retirement account. Your brokerage firm, okay, your brokerage firm may not allow you to do everything, but IRAs now have completely changed the regulations. Okay, the regulations were lifted 2.5 years ago. You can do anything you want in your IRA. You go, my firm doesn't allow me, but there's firms out there that do. What I'm going to show you right now, these are trade alerts. I'm going to show you, people want to see results. Everybody says, well, let's see your portfolio. How are you doing? The first thing is I'm going to show you individual trades. I'm going to show you every trade that I have done that embarks upon the idea of selling premium and Ultima. And I'm going to show you every trade that I've done literally from the beginning of 2021 all the way till present time. Okay. Well, why are you going to show me all those trades? Because I want you to have a track record. I also want you guys to realize, right? It's a live account, right? It's a live account. Here's the profit and losses and everything that I traded. Okay, that's it. It's $134,000. Okay, and again, if people are like immediately like, well, how much money did you have in the account? To start the year, what I often do, okay, you can see I have $304,000 in there right now. What I do is the account gets to 250. I typically sweep the account back to 250, sweep the account to 250. So the assumption is here, I made approximately $134,000 off of about $250,000. This is strictly on a year-to-date basis. And again, you can see the P&L. So last week we're at 284, 284, 284. By the way, this is a Friday, Saturday, Sunday. Okay, there's Monday, big jump yesterday. Obviously, it was a big day. And here's today. Today is pretty negligible, but the day is young. But again, there's no hold barred. And you can see exactly where the money is actually coming from in every product that I traded, right? A lot came from the S&P futures. A lot came from, the micros, because I trade those a lot. A lot came from the Nasdaq here, right? So you're seeing individual P&L. Somebody was talking about silver. I trade that. I trade a lot of NVIDIA, okay? Every single product is listed in detail in here. Everything is listed in detail, okay? But when you net it all out, and again, I'll uncheck everything, it's $134,000. That's just one account inside a separate account in an IRA. And I also want you guys to know, there is no way you can't throw money into an IRA. Like people go, let me see your IRA. Okay, so here's P&L in the IRA. This is on a year-to-date basis. Everything is accounted for. It's $40,000. This is a small IRA, okay? I can't add money to the IRA, so here it is. It's 40 grand. What did the IRA start with this year? Pretty small IRA. Again, I have a much larger IRA. I don't mind showing you, but much larger IRA. Here's another $100,000 over here at Tastyworks. Another, this is about a $250,000 account as well. But every single position, okay, is accounted for. We don't leave anything to chance. We let you see full portfolios, you name it, stocks, options, futures trade, whatever it may be. You can see performance of everything. So what I'm showing you right now, okay, these are our trade alerts. This is everything that went out in 2021 up until and including today. Like, I'm just going to show you everything. It's, yeah, it's like 100 and something slides in here, but whatever. So it's a Tesla short call, just to show you. This is a position from thinkorswim. This is the opening position, closing position, and the return. Okay, that's the underlying that I traded, the strike prices, the price that I sold it at, the price I bought it back for. Again, you can see everything in here against the return. So I'm just going to scroll through quite rapidly. Okay, this is a bond short put, a 57% return. Now, again, we're over a year ago. Okay, there's a bond short put, 53%, 50 or 62%, because this is where a lot of people ask this question. You know, I'm actually going to stand up a little bit here, but so a lot of people ask the question. You're like, well, how can I make any real money if I'm selling stuff for like $1? Okay, I'll tell you exactly how you make some real money. You just burn through more inventory. You know, you want to make yourself like the Amazon, and like legitimately, you want to make yourself like the Amazon of the marketplace. You want to sell premium, buy it back, sell premium, buy it back. The more inventory you can get through, the more money you're going to make. Do you make money on all the inventory? Absolutely not. Okay. The last 2 years, this is the place to be. So IWM, like, who cares? You go, oh, you only made like $1 here. Well, one contract's $100. Okay. Just picking up $100, $100, $100, $100, $100. Not half bad living. Okay, 53%, 76%, 60%, 50%, 51%. All I'm doing right now is just scrolling you through. It's every single trade that I've embarked upon when it comes to premium selling. Okay, by the way, there's a 19% loss. Hey, listen, crap happens. All right, this is a fast moving marketplace. Sold something for 94 cents, exploded to the upside, took a loss. Okay, 54%, 52%, 49%, 47%, 49%. Okay, again, I'm just scrolling through. I'm only in March right now. There's a lot of little trades in here. Okay, once I get people comfortable though with the smaller trades, right? Once I get you comfortable with the smaller trades, you're actually going to see me step up in products. Right somewhere in here, I started stepping them up in product. When I say step them up, there we go. Now we're trading ES short put. The ES is exactly 5 times the size of the spiders, 50% return. Okay, so we're still kind of cruising through, right? A lot of positions in here. Now, after I get people comfortable with a more sizable trade, then we actually come in here and add a degree of complexity. This is actually called a Christmas tree. Christmas tree is a type of a ratio spread. Okay, this one has a $21 credit. What's cool about the Christmas tree, it kind of has a hedge built into the trade. So I sold it for a $21 credit, bought it back for a $3 debit, 85% return on here, right? Kind of continuing to cruise on here. Now we're all the way in September of 2021. Again, it's every premium selling position that I've done. Here's another Christmas tree spread, another home run, $22 credit. Close this thing, and if you take a look, it's actually broken into a multitude of parts. Closed it for a $1 basically debit. It's a 92% return. ES short put, ES short call, bond short put. I like to trade some bonds too. Okay, here we are all the way up to, again, if you're looking now, just scrolled through a ton of trades, all the way into what? February of this year, 54% return, another Christmas tree. This was actually the biggest Christmas tree that I've hit in recent history. I went out and sold this one for $13.68, made a $3,953 profit on 1 unit of the trade. Here's an ES short call, 53% return. We're all the way into March now, 50%, 55%, 50%. Okay. Here's another one we're getting close to right now, 55%, 53%, 51%, 50%, 51%. Here's another Christmas tree. This one was closed for a $1,000 profit on 1 unit. Okay, and again, as I said, we're coming much more recent right now. Bond short put, ES short call, ES short call. This one was actually closed on 5/9. You know when that was? That was yesterday. Here's another one for a 54% return, closed basically yesterday. Okay, listen, this is fairly hands-off stuff. Nobody has to spend extraordinary amounts of time, worrying about like risk management and so forth. Most of the time you put strategies on, you can even use what we term good till canceled orders to get out of them. And what I mean by that, here, if you take a look at my my inventory, okay? Again, when I say inventory, when you take a look at any of my positions, okay? Take a look at my positions. It takes 2 seconds to just cruise through here and be like, oh, I should close this, or oh, I should close this, or it takes 2 seconds to look at the positions and say, oh man, I could have been somebody, I should have closed this. 2 seconds to do that. That's all you need to do, but you don't even have to do that. You can just set up orders to close the positions for you. So if you're working a day job, it's fine. It's a fraction of your time is enough. Okay. Every trade though that you saw a moment ago, these are trade alerts. These are alerts that are being sent to you by text message and or push notification. Depends upon, what kind of mobile device you have, where in the world are you, right? If you're the other side of the world, it's not always easy. You can't always get text messages, but we can do push notification. We have our own mobile application. So everything I'm showing you here, okay, are trade results that we have actually sent out to our clientele. I mean, what better time? You're working, okay, great, do this part-time, all right? It's a way to actually emerge much, much stronger from the pandemic, from chaos right now, of ultimately inflation, okay? This is a skill set that will last you a lifetime. I'm telling you right now, you're gonna need this. What our members are saying, okay? I like this one because a huge down day was May 5th. Huge down day, possibly the best day ever for me. I just picked a couple of random days and time over here. Kevin Burke's all the way back in September. I love this freaking website, TheoTrade. There's so much here, so many different flavors. Can't pull away for more than 15 minutes. Can't get any work done. I like that one. Anyway, Paul, okay, or Kevin here, TheoTrade is the best by far. I've been with them for the rest of my trading career, no questions asked. So I figured I'd throw just a couple of smatterings of what are some of our present clients are saying. Characteristics of selling Ultima Premium. The attributes of selling premium are undeniable. You're never buying or selling the stock, right? You can fine tune your risk to your comfort level. You're never going to use a stop order. I don't ever want to hear the term stop order because frankly, it's not going to work if the marketplace crashes, okay? You can vary time frames, minimize risk. The probability of profit, understand, okay? I just showed you like 150 plus trades. We were on slide 35. Now we're on slide 158. We went through like 100 and some odd trades in there. Here's the reality, okay? Most of the time, there's no real management. You just sit back and, let fly. You put the positions on, you take them off. Put them on, take them off, okay? You don't really often use the hedges. I had to use some of my hedges yesterday. Why did I have to use some of my hedges? Market's getting crazy, downright crazy right now. And at the exact same time I'm telling you it's crazy, this is one of the best times to be trading, okay? Crazier it gets, the better it is. This is the perfect strategy to enhance your portfolio, but also it's an excellent tool for those just seeking to build an account. That's what it's about. It's about an income strategy on a month-to-month basis. And new products, they allow you to do this literally in any account size. So you can't use the, I only have $2,000 or I only have $5,000. That's fine. You got to learn to start somewhere, right? Building a portfolio. Don't let the options portion of this intimidate you, okay? Because what else are you going to do in the present environment? I know a lot of people, I'm going to stay on the sidelines. I'm not going to do anything. I'm going to wait for the perfect timing to do what? This could be years. You are entering into a period, okay, of intense volatility. We might be at the forefront of it. We have no idea. All you know, okay, is the Fed right now is just going to keep pushing against the market. If you ever heard the old adage, don't fight the Fed, fighting the Fed right now is owning any stock, okay? But at the same time, you have inflation. And inflation's just like, oh man, it's everywhere. And it's ridiculous. It's absolutely ridiculous right now, inflation. In fact, tomorrow morning we have CPI numbers coming out, okay? That's consumer inflation numbers. To be, if it's hot, forget it. This marketplace is done, okay? Done for. They're going to crush the market tomorrow if that inflationary number comes out hot, because that means the Fed is going to have to hit the accelerator. Listen, you have got to learn how to do something other than buy or sell stock, or other than think you know which way. Every MACD, every Fibonacci, every Bollinger Band in the world ain't going to help you tomorrow if inflation's hot. It's just not going to help you. You're going to have to learn to sell premium. Selling premium, though, okay, is analogous to like some massive power saw. If you know how to use the power saw, wonderful. You can cut down a tree in seconds. If you don't know how to use a power saw, you're going to lop off a couple of fingers. Options are the exact same thing. They're going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the market. But if you don't know how to use them correctly, you're going to lop off a couple of fingers. Listen, anybody in here, anybody can learn to sell premium. But you are going to have to put forth a little bit of time, right? Maybe you know nothing, maybe you have limited experience. As I said, do not allow the options portion of this to intimidate you, because that's the least of the worries. We can show you how to do it. It's going to take a couple of hours, right? But you're going to need these strategies for the foreseeable market future. And that's something that I don't just harp on, forget for me, okay? I'm telling you, if you're going to be involved in markets, if you really want to learn the way this business works, okay, you've got to learn this stuff. You've got to learn this stuff because you have to know ways to make money other than being right or wrong, other than listening to, some monkey on CNBC talk about what's going up or what's going down. By the way, I don't even do CNBC that often anymore because they chirp in your ear, tell them you're bullish. Okay, it's brutal. You don't even get to pick your stocks anymore when you go on CNBC. It's that bad. I'm telling you, what we do here at TheoTrade is we can show you how and when to sell premium in a matter of a few hours. Okay, specifically what TheoTrade does is we create detailed recipes for every strategy, including selling Ultima premium. It's the same, again, to be analogous here, you wouldn't bake a cake without a recipe. Okay, so why trade without one? And that's exactly what we do. Okay, this is what you need to know to sell Ultima premium for a living. What underlying stocks or indices make the best candidates? Listen, you just saw what my account did and what my account is. I had spiders, I had some IWM, a little bit of bonds. Maybe you know the bonds, maybe you don't. That's okay. Okay. Even saw a couple of stocks traded in there. But again, you need to know what products to trade. More importantly, what volatility should you seek out? People are thinking like, yeah, I'm gonna go in there and use something volatile like Tesla. I traded Tesla, I believe, 3 times in the entire year and a half. Okay, I showed you a year and a half results. Why not Tesla all the time? Truth be told, Tesla volatility, it's a nightmare. You don't want to be involved in that. Okay, too much volatility, you're dead. Too little volatility, you're really dead. You got to have a sweet spot of volatility. What options expiration do I select? Okay, if you haven't looked at a marketplace in a while, look at this. We're back, baby. Mortimer, we're back. Okay, if you haven't looked at an options chain in a while, oh, this is perfect. Here, I'll just pull this up, or here, I'll pull up spiders because most people are familiar with the spiders. Look at these option chains right now. Look how many expirations there are. Okay, think that's not intimidating? 24 days, 27 days, 29 days, 31 days, 34 days, 36 days, 38 days, set, hut, hike, 66 days, 90 days. Oh, if 101 days was good, let's go 129. Okay, why not 129? Because it's too far out. Like, listen, you need to target specifically, dead accurate, the right expiration. You got to have the right volatility, the right expiration. Then you got to know exactly what the delta of the options to sell. I was just goofing around like, oh, let's sell this for $1. Let's sell this for $1. You got to know exactly what to sell. Okay. Then you have to know exactly what to buy against it. How do you hedge the position? How do you actually build the position? You think about that? How many VIX volatility spreads do I need? Okay. How many VIX volatility spreads do I need against? Okay. How many options can I sell? Like, what's the ratio? We'll actually teach you exactly how to do that. Do I need a large amount of capital to do this? Of course not, right? We don't want you to have to come here with huge amounts of capital. Listen, what's the right amount of risk for me? What are the percentage returns supposed to be? What's the most frequent percentage return you saw? I'll give you a hint, it's 50%. How do I protect myself from market crashes? VIX volatility spreads, risk to spreads, inflection point spreads, gamma iron condors. These are all terms you will become familiar with. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. That recipe, this is literally like a pre-flight checklist, okay? TheoTrade literally comes up with, a detailed recipe. It says what might be a good stock or ETF candidate for you to sell premium, okay? Okay, what's the correct options expiration cycle? How much capital do you commit to generating premium? Like how much capital? You have a $20,000 account. What should I use to sell premium? How much of my capital? What strike price options do I sell? Which ones do I buy? How can I limit my risk? Then we have to get into the what ifs. What if the stock goes up? What if the stock goes down? TheoTrade has the answer. We build these recipes with definitive criteria. They're checklists for each strategy and each unique variable you're going to encounter. The whole logic behind a checklist, it's the same thing that a pilot would do, okay, pre-flight. It's the exact same thing. When you get into, a 737, you don't just hop in the cockpit of a 737, throw the keys in there and throttle up and take off. There's a really finite checklist. We do the exact same thing. But even more importantly, it's not just a pre-flight checklist. Once you actually then enter into a trade, you follow a checklist, you enter into a position, then you've actually got to monitor the position, just like a pilot. What does the pilot do most of the time up in the air? Nothing. Plays wordy crossword puzzles. Okay, they do, sadly. They don't, once in a while, dial a little in over here. Oh, 3 degrees right, 3 degrees right. Okay, done. Back to wordy, right? Most of the time, you're going to be selling premium. You're going to do absolutely nothing but closing the positions profitably. Doesn't matter though. You're going to encounter different variables, right? You need to know what you do, okay? We have the answer to those questions. We'll give you the right probability. How many option contracts? When do you actually close the premium sell? What if we sell off big? What if we rally massively? Can I fix losing positions? Okay, it comes down to the how, the when, the why, at what price. I'm telling you, it's just the beginning of the variables you're going to face while selling Ultima option premium for a living, okay? That's what criteria does. You can read about selling Ultima premium. In fact, I always tell this to people, you can Google everything about selling options premium. 10,000 different pages would come up about selling options premium. Maybe you've even done this before. You might already know a couple of trades, but it's not going to help you because what you need is TheoTrade's recipe for success. Nobody comes to TheoTrade to learn to sell premium. They come to TheoTrade to learn the criteria to sell the proper premium. 20 plus years trading experience, access to client order flow for 15 years. By the way, that is just me. TheoTrade is not a one-trick pony. We have 7 other full-time instructors here at TheoTrade. Several of us actually come from both thinkorswim and TD Ameritrade backgrounds. Others come from the hedge fund community. We have viewed and studied millions of trading accounts, and I ran education for 15 years at a firm with the largest option order flow in the whole industry, okay? Criteria is your recipe for success. The following criteria, which is selling options premium for a living, okay? We spent literally years fine-tuning the trade, fine-tuning the setup, fine-tuning each step, okay, to be able to build these trades and more appropriately to manage these trades. We built a course on it. It's a 5-hour course. Before everybody looks at this and says, oh, it's another class for $500. That's not what we do here at TheoTrade. It's not what we do. So bear with me for a moment as I actually take you through this. We have built a course called Ultima Income Generator. It is a 5-hour course. The course is archived. It is available immediately. We like to record the course, clean it up, okay, and ultimately put it in a nice package. It is ready for mobile. It is ready for use on the website. You can watch it on an iPad. Again, we have, all right, our own mobile trading application. In fact, I can even bring it up over here. So when I say our own mobile application, okay, I mean literally our own mobile application. See if you guys can actually see it on there. So as we enter into TheoTrade Mobile, okay, all right, you can actually see all of our classes, and we can actually walk through here, all the different class archives. It's all available to you directly on mobile. We also do push notification. So as long as you have the mobile application downloaded, when I do a trade, you get the trade, okay? That's by design. Now the 5-hour course, let's talk about the course because we do want each and every one of you not to just get the trades that come out. People just like, oh, I'll take the trade, okay? It's fine. But I implore you, watch this, understand it. The archive is available immediately. You can even watch it at 2 times the speed. I sound like a chipmunk, but that's fine. And the class slide deck that includes entry and exit criteria is available immediately for download. Now, before I go any further, because anytime I talk about this, people immediately like, oh, it's another class for another $500. That is not what we do here at TheoTrade, and I can't stress that enough. I built the education division of thinkorswim and went on to run TD Ameritrade's education division. I have seen every education company out there over the years. I mean, I spent, the better part, including TheoTrade, of over 20 years in the financial industry. All right, that's before that I was actually making markets. But when you look at it, most what they do is they go out there, they sell a class for $500. Then you have to buy an indicator for $500 that goes with the class. Before you know it, you have to take a class to learn how to use the indicator from the initial class. But don't worry, because all that's obsolete. And now you have to take a new class and then a new indicator. Okay, we've seen that movie before. I stress to you when I say, TheoTrade's not, we do not sell a la carte classes. That's not what we do. Okay. We go out and provide you everything that you are going to need in this business. What's everything? Everything. We will give you classes. We will give you trade alerts. You can email me directly. Okay, that's okay. It's par for the course. When I say we give you trade alerts, we actually do text people your trades. Okay, we text people. You can email us. If you have questions about that, that's fine. We receive a few thousand emails every single week. It's a large portion of our group here answers a tremendous number of emails. We have a huge trading staff most of them come from the brokerage business. We don't shy away. You can ask us trade related questions. And I always stress that to people because they're like, can I ask you about my 401k? Go for it. There's nothing that I haven't seen before. All right. From 2001 to 2015, it's in the brokerage world. I've had every license. I've had Series 3, which is, obviously the NFA, which is futures. I've had my Series 4, which is an options principal. I had my Series 7, which is just a regular broker dealer. I had my Series 24, which is a principal broker dealer. And I had a Series 66, which is a 63 combined with a 65. You want fries with that? It's a registered investment advisor, because early in my career, I did manage approximately $400 million. Okay. What is it good for? Being able to answer trade related questions. We do all of that. And we give you trade alerts. It's all included as TheoTrade, and we give you classes. Better than that, we actually have a chat room where you can communicate with us and actually see our screen. So when you're done with this today, you can go hop right into a chat room and watch people trade throughout the course of every single trading day. It's all part of TheoTrade. But predominantly, people are here today because you want to learn to sell premium. Just fine. Okay, fantastic. Let me take you through what this class is. Then we'll actually give you a couple of incentives to, of course, enroll for TheoTrade today. Now we have are approaching 6,000 clientele on the TheoTrade platform, which is ultimately there's over 6,000 clients here. Some people come just to learn to sell premium. Some people come for the trade alerts. Some people come because they want to learn to day trade. Okay, it's a very wide spectrum. Again, we have 8 full-time instructors, including myself. With 8 different instructors, everybody has their own genre of trade. I'll show you that here momentarily. First, let's get down to it. What does the Ultima class teach you, like the curriculum for it? So you're going to learn to generate consistent, returns selling premium. You're going to learn how to build a portfolio of high probability trades, Then we're actually going to take you through detailed entry and exit criteria for selling options premium while keeping risk at a minimum. We're actually going to talk in the class a little bit about like Greeks, so selling option premium and then managing, everything through one easy number. You're going to learn to use a risk array. Risk array is really cool because it doesn't show you your risk right now. It shows you what your risk is going to be tomorrow, the next day, a month from now. So think about, you can actually plan like every move you're going to make. It's like playing the game of chess 5 steps into the future. You're going to learn how to properly allocate for selling premium. All right. It'll actually help you minimize the risk. You're also going to discover risk mitigation techniques, all right, to hedge the most extreme environments. That's when we're talking about VIX volatility spreads. You're never going to get caught off guard. Markets can explode higher, markets can sell off. We're also going to learn how to sell premium in small accounts and or a retirement account with innovative new trading vehicles that have never been available before. That is what people come here for, Okay, that is what I've been talking about today is the Ultima Income Generator course. In addition to this, here's a little twist. We actually have the inflection point spreads class. Okay, you're like, what is this? It's a completely additional course about selling premium. The volatility this year got so extreme, okay, that I taught a little additional piece to Ultima. This is inflection point spread. We call it the IPS. The inflection point spread is Ultima, but I twisted it actually to create even more of an impactful trade where you can actually sell premium and hedge all in one transaction, meaning that you don't have to go put on a couple here and put on a couple here. Okay, you just basically put a trade on, okay, monitor it, take it off, it's profitable. Put a trade on, monitor it, take it off, it's profitable. It's a 3-hour course. This one is almost brand new. The course was actually done just a few weeks ago. Class slide deck that includes all the entry and exit criteria. You can download it today. By the way, you can watch the class today. I mean, there's no, again, it's no holds barred. We have it set up like Netflix. You can watch it on your phone. You can turn around and watch the rest of it, on your computer, watch it on an iPad, wherever does it for you. Okay. Here's the actual curriculum. Learn to sell premium, hedge risk in one transaction. Create a high probability position, generating monthly returns. Discover how to hedge existing positions, even in the most extreme in environments. By the way, one of the coolest things is the inflection point spread. We could be crashing, and you can hedge off risk during a crash. Okay, you used to not be able to do that very easily. This class will actually teach that. So again, you're going to discover, even if you have existing positions, like if you're looking at markets right now, they're rallying. Right now, they're rallying. That may not be true tomorrow. Okay, I urge you, spend the time, learn how to do this. Okay, because if things get crazy in the next 24 to 48 hours, learn how to mitigate the risk. We'll give you detailed criteria for inflection point spreads, keeping risk at a minimum. Learn to analyze the inflection point spreads so you're never going to be caught off guard, and find out how many inflection point spreads you can do for any account size. Okay. Additionally, with this, everything I've talked about today has a 90-day money back guarantee. Hey, listen, I just want to throw this out before I go any further. Okay. We have absolutely no risk to you. All right. Check out TheoTrade, check it out for the next 90 days. If it's not for you, there's no stipulations, a money back guarantee. Go to support@theotrade.com and just email us. So the money back guarantee is pretty clear. And I throw this out here right now because I want everybody to realize, listen, we have just about 6,000 clientele here at TheoTrade. We want people, okay, that want to really learn this business. If you want to go learn like, the magic red and green flashing lights, go for it. Okay. None of that stuff works. None of it works. Like there's no magical signal, the magical mythical, 618 beast that, people are grabbing out. By the way, yes, I'm poking fun at Fibonacci's. Okay. I've seen every type of technical analysis. Again, I helped build some of the thinkorswim charts. In fact, the gentleman that actually built most of thinkorswim charts, he works here. His name is Jeff Bierman. Okay. He's kind of like one of our right-hand people, but he's our technician here at TheoTrade. Anyway, I stress to you guys, listen, if you really want to learn this business, we want people here that really want to learn this business. Okay. What we do is we initially get people enrolled for 90 days. Any point in the 90 days, if it's not for you, just get your money back. Okay. Here, I'll throw it out there right now. It's only $297 for 90 days. That's the incentive today. So it's $300 for 3 months. You can email us anytime. You do realize that if you emailed us one time, and I could save your bacon one time, think it's worth the $300? Of course it is, right? I mean, again, there's no, no excuses, no questions, no commentary needed. If you're not happy with us at any point, get your money back, okay? And we want people, as I said, that want to be here. But if, you're not getting it or not having the time, life sometimes gets in the way. You're coming into summer, you're like, I don't know if I have time for this. Okay, you should, because at this point, your finances are on the line. Some of you are going to be down 20, 30% right now on a year-to-date basis. You haven't noticed, okay? But what? It's not even but mid-May. We're already down like 20% in terms of the S&P. It's real close, by the way, to that. I think it's down about 17, 18% today. Nasdaq is down clear over 20% on a year-to-date basis. Okay, take the time to learn it. I'm not saying you don't have to spend hours a day doing this. Take the time to learn this stuff. Okay, again, basically it's $300 for the next 3 months at any point. Okay, get your money back if you're not happy. You just go to theotrade.com/SKU. Okay, the /SKU, that's actually the address to hop to. And I'll actually pull it up here. Let's see if I can actually pop the site up here. Here is theotrade.com/SKU. Okay. Come in here. It's the Ultimate Income Generator class. Obviously, our email's on there. Just click add to cart. There's one thing I want to quickly go over with you here in the add to cart. If you want, okay, if you would like text messages, put your phone number in here. Put your phone number in there. It automatically enrolls you for text messages. The reason I state this is we have people that enroll for TheoTrade. They never put their phone number in there. 3 or 4 weeks go by and they say, I never got one text message. What's wrong with you guys? Okay. You never got a text message because you never enrolled. This automatically enrolls you for it. Okay. I stress to you guys, each and every one of you. Okay. There's not a million text messages going out. Right. So you just don't worry about getting texted 20 times a day. On a busy week like this week, I think I did 5 text messages yesterday, and that's a busy week. The entire week, this week, we might do 8 to 10, and this is going to be a rocking week. So make no two ways about it. Again, you can do a single payment. It's $297, 2 payments, $149, 3 payments, whatever, $100, whatever. Again, it's a money back guarantee on it. And that's all over here. And again, you just go to theotrade.com/SKU to enroll. Now, I haven't even explained everything about TheoTrade, which I'm about to. Okay, I like to bring this right up front. There's no risk, so it is what it is. It's $300. Okay, we incentivize you to enroll for it today. Okay, what's the incentive to roll today? Is we're actually giving you the inflection point spreads class with it. What's the other incentive to enroll for today? We open up just a handful of the riskless spots in here. So let me take you through, though, everything we give you here at TheoTrade. Okay. And by the way, I'm just reading some of the questions in here. And by the way, I will answer every single question in here. And by the way, if you have Canada, we have brokers that we suggest in Canada. Okay. It's there's several people asking this. Yeah. So several brokerage platforms that we do work with in Canada. Anyway, it's theotrade.com/SKU. Now, if you want a bonus, I want you to see now that I explained everything about Ultima, okay, and all of the different alerts that are going to come out. We're also going to talk about everything that comes in TheoTrade. TheoTrade is kind of all-encompassing. We do not sell you like a class for $300 and sell another class for $300. It's $300 for 3 months. That's it. We go beyond one class or one indicator. We get it. Like, we get it. You want everything to trade, everything you invest. You want it at one place and one price. And that's exactly what we do. I mean, you could go out and you could legitimately spend $30,000 on a stock market education, and it will pale in comparison to what we can do for $300 for 3 months. You go, how can you say that? We know there's no education company that we have not come across. Again, we were thinkorswim, we were TD Ameritrade. We know everything that's been out there. And I stress that to you because, you know, some of our team only came from TD Ameritrade this last year. Like, they've seen it all. We've seen it all, and we've added everything we possibly can. By the way, somebody said, what do you do after 3 months? After 3 months, by the way, if you want to do it again, it's $300. It's not an introductory price. So I appreciate that when somebody asks that. If you want more trade alerts after 3 months, it's $300. It's $300, 3 months. I mean, what happens after 3 months? You have to decide to enroll again. It's not like a gym membership where you have to give blood to get out of the gym membership. It is what it is, you know? Okay. By the way, all the different bonuses, we give you a quick start beginner's guide. If you've never placed a trade before, okay, we're well suited for you. Look, this is TheoTrade. There's a start here menu. You know what the start here menu? 101, 201, 301. This takes you through all the basics. Okay. And I'm going to actually torture each and every one of you. I suggest that everybody in here watch Order Execution Part 1, 2, and 3. Okay. I don't care how experienced you are in this industry. You don't understand order execution like we understand order execution. We built the order execution platforms. Okay. So when I say order execution, I mean, this is how a trade is actually sent. This is how you get a better fill. Okay. This could save some of you thousands of dollars if you trade some decent size. You'll love it. Serious. So that is like a beginner's guide. It's a quick start beginner's guide. Bonus number 2, we give you access to every single class since we started TheoTrade. And you go, what do you mean? Okay, well, yeah, we give you kind of the full Monty here. This is how TheoTrade looks. I mean, this is the site. We broke down option classes, option newbie classes, technical analysis, day trading, stock trading, futures, pairs trading, trend trading, hedging. You get access to all of them. Mindset, huge, the mindset classes. You get access to everything from day one. Why? Because it's the only thing to do that's right. This a la carte class thing is ridiculous. Okay, we're in this business here, right, to trade, and you're welcome to learn to trade with us. But you get everything from day one. Inflection point class, the Ultima income generator, the income accelerator class. There's a brand new class we just did with Blake Young. It's called Z spreads. Okay, you guys are going to love the archive in here. You get access to everything from day one. If you're an options geek, you're going to love it. But okay, I know I was poking fun a moment ago at like Fibonacci's. Well, guess what? We have some of the top market technicians in the industry working here. I'm allowed to poke a little fun at Fibonacci's. Okay, why? Because we actually have them in here, right? I mean, it's all DMI class, trade trigger, price retracement tools, which are your Fibonacci's, oscillators class, okay? Bar none, Jeff Bierman is actually professor of finance at DePaul and moonlights with us on the side, right? Fibonacci trading class, there it is. You get access to all of these right off the bat, okay? Everything that we do, you get access to. Everything we have done since 2016 is in here. All right. Bonus number 3, all access VIP membership pass. What is that? 3 months access to our chat room. Okay. What does the chat room look like? Oh, here, this is Theo. And this is live right now. So this is actually Tony Rago, live and uncut. Okay. And what you're actually looking at right here, this happens to be our chat room. So in any given day, by the way, this is actually Tony's screen, and I can turn on the sound if you want to hear him.
Arnie, I'll open this chart for you real quick.
He's actually talking directly to a client right now, but I'll freeze that. By the way, you can kind of zoom in, zoom out. You can break the chat room off to another screen, but any trades that we do also, like intraday, we post in here. So all of the trades that we do are posted in here and shot out in text message form, okay? People constantly sharing different trade ideas in here. It's awesome. I mean, by the way, on any given day, you could have a few thousand clients in there. We go beyond that. We also give you access not only to the live trading room. And by the way, this is all part of TheoTrade. It's all $300, yada, yada, yada. Okay. But there's a lot of places that charge you $500 a month just to belong to their chat room. We do it. It's all part of it. We give you the chat room. We give you text and push notifications. There's 5 different trading portfolios. We also do daily coaching sessions in here, and everything is archived. Every single word we speak is archived. And we directly answer your trading questions via email. Doesn't cost any more to do that, right? It's like another $1,000 of support trades and insight. These are the instructors: Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, Steve Miller, Tony Rago, Blake Young. Okay, the lineup is unbelievable. That's why I said you can go out and spend 30 grand on stock market education. It's not going to pale in comparison. Every one of these people, okay, has over 15 years of experience in the industry. Slim Miller is 43 years. Okay, me, I'm a baby compared to him, right? I've been in it since 1998. I'm 24 years in the business. Tony Rago has been in the business since 2001. Blake Young, just as long as I have. Actually, Blake Young also comes from thinkorswim TD Ameritrade. Brandon Chapman, thinkorswim TD Ameritrade. Okay, Jeff Bierman, thinkorswim TD Ameritrade. These are individuals we ran. Okay, I specifically ran that entire group, and most of them actually worked in that group at the time. Anyway, so the background on some of the instructors. This is everybody kind of working from home during COVID. All right, next, we give you access to all proprietary indicators and scans. We don't sell any proprietary indicators. We don't sell any scans. Okay, we give them to you. Gravity points, RSI, Laguerre, Quantix. I use Quantix every day. Okay, next generation squeeze, complex position tracker, SPX expected move. Okay, a ton more. It's over $1,800 in indicators and scans. We give them to you. And I want people to understand this. You realize that you can enroll, okay, and you can cancel. You still get to keep the indicators. That's up to you. Like, we're not here to take advantage, like, give me my indicators back. We can't take anything back, okay? James was asking, what's the cost after 3 months? $300. Inflation doesn't hit us, okay? If you lock in at $300 like for 3 months, Okay. When your renewal comes up, it's $300 for 3 months, right? It is what it is. Like we don't really play games here, and we'll incentivize you to enroll for it because there's a money back guarantee, but that's it. Bonus number 4, TheoTheo Live portfolio. Everything I've discussed here in all the trades, okay, it's a new positive premium selling portfolio. This, I'm going to say this, okay, this is the TheoTheo portfolio, okay? This is it. You go, what's the TheoTheo portfolio? Okay, well, this is what I'm talking about. It's no holds barred trading approach. You get to see everything we do. Full disclosure, all trades, opening, closing, hedging. You get to watch me trade. We also have TheoTheo Small. TheoTheo Small. What's TheoTheo Small? This is the TheoTheo Small. Okay, and the small portfolio is just that. It's just a small portfolio. It's a small version of it. It's meant for smaller accounts. It is what it is. Okay, and again, you get to follow every single move. And when I say every single move, look, that's the last 7 days. But look, you can see everything I've done year to date. Every single trade that I've done in this account on a year-to-date basis, right? You can go back. I don't care if you want to figure out whether we made money, lost money. Let me tell you right now, we've made money. We haven't had a losing trade in quite some time in here. Is that good? No, we're overdue for a losing trade. But the reality is we hedge, we reduce risk, okay? And that's why this stuff works. All right, this is what the Ultima portfolio looks like. When you're going through the portfolio, these are trades you can actually copy and paste directly into your trading application. So it's just a spreadsheet that you can literally copy and paste the trades. But time out for a second. I know a lot of people look at this stuff, they go, oh man, this is too much. We update in a video. The video comes out every Friday morning. We update everything we do in the portfolio in 12 minutes. So in 12 minutes, you get to see every single move that I make, okay? And I reiterate, it's 12 minutes. It'll update you. And the stuff that I do, like, you're not going to miss very much. Meaning, like, you're like, oh, I missed that move. Oh, this is not about like perfect timing. These are really hands-off strategies, right? So when you come in here and you can just watch a video and in 12 minutes get updated on everything that we've done. It's just part of it. I just want you guys to know that you don't have to sit there all day long and be like, it's exhausting, you don't have to sit there all day long. If you want to sit there and watch the chat room all day long, okay, I tell you, we have about 6,000 clientele, and any given day, we're seeing just about 2,000 people of the 6,000 in the chat room at some point during the day. So about 1/3, okay, embark upon the chat room every single day. Go, what are the other 4,000 people? We have people that are members of TheoTrade. They just email us once in a while. We have people that are members of TheoTrade. They just want the trade alerts. It's fine. Again, we are everything encompassed in one. Like if you don't use this to the full extent, that's okay, right? Everybody comes here for different reasons. Bonus number 5, the technical analysis toolkit, Tech 101, Tech 201, timing base, okay, pattern recognition. There's 21 other technical analysis classes all included. Bonus number 6, day trading treasure chest. Okay, this is intraday. We have 2 instructors that are full-time, Corey Rosenblum and Tony Rago. Well, all they do all day is just trade on an intraday basis. If you do want to day trade, we will teach you how to do it. And we will teach you how to circumnavigate any day trading margin restriction. You will not be restricted. Okay, there is no restriction. I don't care whether you have a $2,000 account. We teach you the right products to trade so that there's no day trading margin restriction. Okay, so all of that is included. Bonus number 7, mindset mastery. A timeout. I would write this one down. I don't care how experienced you are, the 5 essential building blocks to successful trading with Slim Miller, okay, bar none, one of the best courses we've ever put together. And I say we, it's Slim Miller, it's all Slim on this one. But 5 essential building blocks to successful trading, that is a class that I will tell you, I only saw that, I think we actually came out with that one a few years ago. It's about 3 years now. And first time I saw it, I was like, holy crap, that just changed the way that it's going to change the way you view markets, it's change the way you view capital in general. As I said, even some of the most experienced people, and if you're not experienced, you should still listen to it because you're going to come in with the right mindset about trading, capital in general. It is eye-opening. And the reason I mention this specifically is because, there's a lot going on today, and this goes by the wayside and you forget, but I'm serious, write it down. That's one of the first classes I would watch. Okay. I mean, the Ultima is critical because you want to learn to sell premium right now. For the 5 essential building blocks to like successful trading, I am telling you unequivocally, it will change the way you view everything. It's not just about markets. It's the way you're going to view capital and so forth. Guy's awesome. Okay. And I've known Slim Miller since I'm literally a little kid. Part that I didn't mention, I actually grew up in this industry. I grew up around traders, grew up around, Chicago market makers. Bonus number 8, quick start guide to Ultima trades. Some of you have experience, okay, and want to get started immediately. We built a quick PDF guide, kind of like when you opened up a brand new fresh printer for the first time. It's got like a quick start guide. We built a quick start guide for Ultima trades. It's all included. Listen, what our members are saying. Pat says, thank you for the reply. This is very much appreciated. TheoTrade is the first educational trading service that I'm actually making a profit, and one which I see a pathway to retirement. And again, that one came in January. We give you everything: classes, coaching, email access to the instructors. And again, I make a big deal about email access because nobody does that. Nobody ever wants to take like the risk of, oh, I emailed somebody. Email us. You don't have to tell us it's your dog's sister's girlfriend's friend that has this position on. You don't have to email us and say, hypothetically, I'm in trouble in Apple. Just come out with it. You know what? Do me one better. Copy and paste what your position is into the email. Just make your life easier. We'll answer it. Live trading room, live trades, indicator scans, and mobile access. It's everything you're going to need to succeed. We literally, here at TheoTrade, we built a Netflix for traders. It's $297 for 3 months. I already mentioned that. I want to make something very, very clear right now. Okay. It's not a membership. I always call it like a member, but it's not a membership. After 3 months, you have to tell us if you want to do it again. Okay. But I remind everybody, we have about 6,000 clientele here, and people keep coming back. Some people like, oh, I'm going to travel for the summer, so I'm going to ease off. Listen, we get it. Life gets in the way. Okay. It's $300 for 3 months. You're not going to go wrong. Access to over 100 trading classes, new monthly classes, the inflection point spread class, Ultima, 59 indicators and scans, text, push notifications, daily coaching. Listen, we directly answer your email. Go to theotrade.com/SKU. Wanted to reiterate, it's a full money back guarantee anytime in the next 90 days. By the way, people like, you can watch classes. Again, there's no stipulations to our money back guarantee. If you're not happy, don't call us. Just email support@theotrade.com. It's okay. Like, again, it's only $300. And I want to make that very clear, which we made pricing here. We try to come up with a price we figured would be like completely and totally like, whatever, man. It's $297. Okay. It's not going to hurt you. It's not going to hurt us. If you ask for the money back, I want to part with every single one of, like, if people don't like it, it's okay. I want to part with you on good terms. So just email us and say, hey, give me my $300 back, and that's fine. And if you receive the refund, you get to keep bonus number 1 on us. And you get to view any of the classes, like view inflection point spreads class or Ultima class. You get to view the classes, so forth. We can't take that away from you. But, we want you to see, like, hey, this is, it's the full Monty that you get to see here at TheoTrade. And it's very unique and kind of refreshing, I think, inside of this business. But it's $297 for 3 months. By the way, there are 30 spots on the TheoTrade riskless deal. This is the incentive we give you to enroll today. You go, I can sign up anytime. Yes, but for the riskless deal, we incentivize you to do this today. There are 30 spots open on the riskless deal. Okay. As you enroll, I will read off. I can already see a couple of people have enrolled. I'll read off your first name, okay, and where you're from, to let you know that you've enrolled in the first 30 spots. We give you, again, everybody gets unlimited email mentoring, and $297 offer has never been available before, with Ultimate Income plus inflection point spreads, and there's no stipulations to the money back guarantee. Again, I'll just pop you over to this page because somebody asked once again. It's theotrade.com/SKU. It's S as in Sam, K as in kick, E as in echo, W, theotrade.com/SKU. You simply click add to cart. Okay. That'll actually populate. Don't forget to put in the phone number because it automatically enrolls you for text messages. All right. So on top of that, what our members saying, just closed my year-to-date profit from Ultima trades is paid for a TheoTrade yearly subscription that comes from John. Everything that we give you today. Ultima, Quick Start Beginner's Guide, access to 100 classes, access to our chat room and all the live trades, access to the TotalTheo portfolio, of course, technical analysis toolkit, day trading treasure chest, mindset mastery, Quick Start Beginner's Guide to Ultima trades from Jeremiah. This is a more recent one. My first 4 trades following exactly the details in your Ultima class just closed out GTC, which stands for Good Till Canceled. Set right after I got into the trade. This paid for your class in less than a week. Very thankful I subscribed to your services. Keep up the good work. Thanks, Jeremiah. Again, TheoTrade.com/SKU. Oh, that's where the auto expected move indicator happens to be. For those of you, by the way, if you're enrolling, okay, or you have enrolled, so thank you. I just saw, is it Sam? I'm going to call you Sam because I'm never going to get your name right. Said I just enrolled. As you go in here, these indicators are already available on our site. But again, the indicator is found, the auto expected move indicator is found on the bottom of this page. Okay, let me answer a couple of generalized questions and then get to some specifics in here. Okay, these are a few emails. You know what? I want to throw one more email out here to you. This one comes from Todd Summerall. Okay, it says, "Hey Don, don't know if you remember me, but I emailed you a few weeks ago and told you my delta was positive a couple thou or more. You told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you." The reason that I throw this email up here is just to explain to you, I will, and none of our instructors will ever shy away from direct questions. This gentleman, Todd Summerall, came to us. He had a ton of risk in his portfolio. I'm like, if you don't smash the portfolio right now, you're going to lose your retirement. And he smashed it. Okay, when I say smashed, he had to close out of stuff. I mean, he was in way, way over his head. We could see it coming and he didn't see it coming. Anyway, it said, big hearty thanks to you and all of your team. My finances would have been a goner without your advice. Okay. And again, this is what we're here for. Most of us, okay, carried every license imaginable in the brokerage business. We knew exactly how to answer those questions. Speaking of questions, I'm going to answer some generalized questions, and then I'm going to get into specifics. By the way, a few names, as I said, I'm going to read off just a few names. It takes me about 5 to 7 minutes before I actually see somebody that's enrolled. Donald E. from Minnesota, Scott U. from Minnesota, Richard S. from California, Frank L. from Michigan, Vince R. from California, Edward F. from Florida, okay, Sam A. from California. Again, I'm just reading off a couple of the names. Those names, and I think initially the 7 names, have now enrolled. Again, we have 30 spots on the riskless deal. As I said, though, it takes me about 5 to 7 minutes before I actually see your enrollment. Again, it's TheoTrade.com/SKU. So a few generalized questions, and then I promise we'll kind of wrap up. I'm running a little later than I wanted to. Okay, what do you need to get started here? A laptop internet connection. Speaking of a laptop internet connection, now you can even use like a tablet. It's fine. We have everything you're going to need, from absolute novice to some of the most extreme. Number 2, this is not a membership. We don't do membership anymore. We don't auto renew. Bear with me here for just one moment. Okay, make sure we're good to go. Okay to go. By the way, Elvis M for Texas. If I lose anybody here, I am seeing some internet issues on my side. Okay, it's the one exciting part about living on an island. Okay, variations of all the trades. Sorry about that. We're not a membership. We don't auto renew. Okay. We're now providing TheoTheo weekly video updates so you can follow all the moves. So in 12 minutes, we update everything. Number 4, we archive everything. If you can't watch anything that we do at any point along the way, okay, is archived. Everything. If you access mobile, okay, you can watch the archives. You can also watch the archives in any web device. That's fine. You can even speed up the archives and watch them at like 2.5 or 3 times the speed. Again, watch it on your leisure. You can even like download onto your mobile device and watch it when you're not connected to the internet. By the way, Joseph S from Georgia, and I got Elvin M from Texas in here too. I apologize. I had some network issues that cut in and cut out. Saw the names come up like twice in here. Okay. Add your cell phone number when enrolling to receive text, okay, message. And again, download TheoTrade mobile for push notifications. Moving on here, you can email us anytime, receive a response within 24 hours, including trade-related questions. There's one thing that I implore you, please implore you, okay? You can't email us on a Friday with 5 minutes to go to the close, okay? Because I trade, we all trade, it gets pretty intense. Give us 24 hours, you will get your response. Number 8, you gain access to every course we've done in the previous 5 years. Classes, coaching, live trading sessions, everything is searchable. We have like a little Google search index inside of TheoTrade. Number 9, variations of every trade we discuss can be done in a retirement account. That's important in an IRA with as little as $2,000 in the account. Number 10, we at TheoTrade can help you get approved for options trading at several major broker dealers. Do not think, okay, because again, most people say oh, well, I can't do this at my brokerage firm. You can. You do have to have $2,000. That's not my rule. That's not the brokerage firm rules. That's actually a FINRA rule that you have to have $2,000 in the account. So we can get you approved. By the way, Wayne C. from Texas. Okay, just reading off a few of the names. By the way, thank each and every one of you as you're enrolling here for TheoTrade. You can hop in our chat room. Corey Rosenblum is coming on live into the close here in about 40 minutes. So remember, there are 30 riskless spots. Get results, take action, enroll for TheoTrade now. I'm going to just answer some generalized questions and I'll kind of wrap things up today. Again, it's theotrade.com/skew. When I say some general questions, just some questions that have actually come up in the chat room here. Somebody said, do you sell index options? Yeah, for sure. I mean, I trade a lot of spiders, a lot of QQQ. SPX is the scariest place ever. I come from the SPX. People always ask, when I traded in Chicago, what did I trade? I come from SPX days. Predominantly, though, I actually traded futures against an SPX portfolio and an OEX portfolio. I was involved in 1998 in what was called the 1-5 arbitrage trade, for those of you that have ever heard that before. Mark actually said, yeah, he asked here, I'm answering it in real time, what size IRA account we needed to sell, okay, options over at TD Ameritrade. Well, I'm going to tell you right now, Mark, you'd want to move accounts. So Charles Schwab now owns TD Ameritrade, and they've made it, how do I say this eloquently, very uncomfortable and restrictive, Mark. So if you want to do this, you have to have, and again, we have the relationship, Tastyworks. But a lot of people don't know, what's Tastyworks? This is from the founders of thinkorswim. This is their next shot. By the way, they just sold the company for $1 billion, and now they're running, okay, about a $10 billion company. So Tastyworks is in the big leagues now. But this company actually was allowed themselves to be acquired, and they're now running the firm. It's called IG. You have to have a $5,000 account balance, and you can do anything you want. You can see I have $3,500 in margin, and that's an IRA. So, Mark, I know it's you got to learn a new platform, okay? But you will have no problem because we will get you clearance over at Tasty. So we have unbelievable recourse with the brokers, unbelievable recourse, because I'm on a first name basis with every CEO of every major brokerage firm, including Charles Schwab, including E-Trade, including, of course, even Robinhood. Robinhood, we're really close to a bunch of individuals that work there as well now. All right, moving on here, going to answer a couple of more questions. So at least $2,000 in the regular account, but you have to have $5,000 in an IRA. Somebody said, is it enough to have $5,000? And the answer is absolutely. Okay. All right, onward and upward. Somebody said there's no defined risk. Bill was asking this question. Okay. Actually, the risk is mitigated. I don't want to call it defined, but the risk is actually mitigated by using, hedges in place. So the answer in very short is you're going to know exactly what you can make and predominantly what you can lose within a few dollars in any given position. In fact, that's actually taught in the inflection point spread class. We talk about the risk array, and the risk array, it's awesome. It's just, that's probably my favorite thing to teach, because that's something that most people don't know how to properly utilize in this industry, is the risk array. So you're going to get tremendous experience on that one. Young C from Virginia, thank you again for enrolling. I think I mentioned Wayne C from Texas already. So Wayne, I don't know, I'm reading your name off multiple times in here, but thank you. As I, again, my internet issues dropped out for a second and things got crazy on my side. All right, a couple more questions. I'm going to wrap things up. I'm following Ultima trades. Can I do trades on my Schwab, or do I need to be on the platform? So Louise, so again, we are not a brokerage of any way, shape, or form. I'm just going to tell you flat out, you want to use thinkorswim platform or want to use Tastyworks. I don't mind saying that. And you go, well, I don't have those. You can do this on other platforms. You can do this on other platforms, but those are the two that you want to use, because everything else, okay, it's like Mickey Mouse, in comparison. And I'm not beating up Robinhood. Again, one of my closest friends now runs Robinhood. He's one below the CEO of Robinhood, and he runs day-to-day operations there. And I'm not beating them up at all, but Tastyworks and thinkorswim are designed for this, okay? And I'll tell you exactly why, because I helped build in thinkorswim, and the same people, okay, that built thinkorswim built Tastyworks. It's designed to be a premium selling platform with risk mitigation tools. So yeah, it's good stuff. I actually appreciate that question, Louise. That's fantastic. All right, onward and upward over here. Make sure everybody is answered. Okay. By the way, William, you absolutely can sell options in the IRA. It's just, again, not every brokerage firm allows that. So we'll make sure that you're comfortable with that. Okay. And again, you do have to actually have $5,000 in an IRA to be able to sell that premium technically naked in the IRA. So with that, I know I've gone way over. Okay. By the way, somebody was asking about interactive brokers. We don't work with them, but you absolutely can use them as well. It's one of the least expensive platforms out there. With that, listen, I've gone way over in time. I want to thank each and every one of you for attending today. If you're still enrolling and I did not read off your name, again, it takes me 5 to 7 minutes. We have 30 spots, okay, that are available on this riskless deal. Enroll, it's $297 for 3 months. Again, there's absolutely no risk to you. If you ever need to get a hold of myself or anyone here at TheoTrade, it's just support at TheoTrade.com. Again, to enroll today, TheoTrade.com/SKU. 2 names just populated in here. I want to thank Brian R. from California, Eddie A. from Virginia. Again, there's a handful of spots left out of those 30 riskless spots. Please join us in the chat room. Just so you guys know, each and every one of you should know this. I kick off every trading day, 9:30 Eastern time. Okay, we're already live. You probably want to be in our chat room about 10 minutes before the bell goes off. I actually will go live probably about the time frame of 9:20 Eastern time, but at 9:30 at the bell, we're off and running. That's my next time frame that I will actually be on. Corey Rosenblum, right now it's right now it's Tony Rago. Corey Rosenblum will be live into the close. It's predominantly a futures trader, but our options traders come on in the morning. Okay, mainly futures traders in the afternoon. I want to thank each and every one of you for joining me today. Have a wonderful afternoon, and bye-bye.